There in tears in your eyes at every step of our goodbyes. Pink curls and a ruffled worn sweater, you left them behind like a love letter. I can make a sentence and nothing makes sense. We had our moments, I relive now, again and again. You are like a solar eclipse on my lips, like hiccups and cold, break the bullshit. My solar eclipse, go off script, give me hiccups and cold. Give me hiccups.
Yo, what is up, Benzinga family, Zinger Nation? Happy Sunday. Thank you for tuning in. We're going to get started very, very shortly on some serious options education. All right? Let me know right now. Let me know in the chat if you feel like you could improve your options trading game. Come on, be honest. Let me know. Give me a 1 in the chat if you feel like there's room to start making some more wins with options and protecting your capital. Give me a 1 in chat if you think that when it comes to options, that it might be time to stop guessing and start making informed decisions. Melissa feels it. It is time. Michael feeling it. It is time. Educate, master trade. All right, you're in the right spot. Tim, yeah. Shelly, no, this is not a replay. Roderick, time to start taking options trading seriously. You're in the right spot, my friends. You are in the right spot. Guys, make sure you are smashing that like button. Those of you that have attended these sessions before know that we have participation quotas, and you guys are responsible for it. That means asking good questions, thoughtful questions. Doesn't matter if it seems basic, doesn't matter if it's advanced. Get in there, participate. We will reward you. The first thing that we want to see is this video get to 100 likes. So just get it out of the way. Smash that like button. All right? You'll feel better after you do it. I promise. Smash that like button. Once we get to 100 likes, we'll start dropping that swag on you. Gift cards for the Benzinga swag store. You know how we do it. Exactly, Shelly. Exactly. I've been down here way too long. I want to see the sun. Guys, this is going to be a very, very good session. You're going to change the way you think about risk if you pay attention. You're going to change the way you think about options in general if you pay attention. All right? And we're going to get ourselves set up for the week ahead. All right? So smash that like. Just get it off your chest. Just get it off your chest. Feel better. Exhale through the inhale through the nose, out through the mouth. Smash the like. Yeah, it's Brooke. It's so simple. You take your finger, put it on the thumb button, the one that put it up, and press it, and then we're off. It's that simple. Gosh. Guys, this is going to be a great session. We're going to get started. Just a reminder, participation is rewarded. So ask those unique, thoughtful questions for the benefit of everyone else that is here, so we can learn together. Make the most out of your time. You have a limited amount of time on this earth. Make sure you use it wisely. This is a really good opportunity for you to chill out, chillax, listen to some tunes with the Benzinga gang, trading squad, and learn how to become a better options trader. And if you know anyone that could use a little crash course into trading, technical analysis, fundamentals, options trading, share it. Share the video. Because the more viewers we get, the more gifts we shower upon you from the heavens. Hats. Bomber jackets. Socks even. Shirts. You name it. Beanies. Baby clothes. Whatever you call those. Onesies. That's it. Onesies for the baby. With the Benzinga logo on it. All right, guys. I will check back in with you in a little bit. But in the meantime, if you get some newcomers in here asking questions like, is this pre-recorded? Will I get a recording of this? Is this about options? Be a good community member. Be a good citizen of the Zinger Nation and help them out. That's what this is all about. I'll check back in with you in about 5 minutes, all right? Don't do anything I wouldn't do.
Let's go.
Ladies and gentlemen, we have Jason Rasnick in the house. Nick Radcliffe, thanks for doing this, bro. I truly appreciate it. I know you have better things to do on a Sunday. However, we appreciate your time. And we appreciate your time too, because we're grinding here for you. That's what we're doing. So don't worry about it. We're all enjoying ourselves and loving it. Michael S. I just want to say my name's Rodrigo. I'm gonna put my email in the chat. Let's talk. I'm gonna work with you, okay?
Whoa, did someone say Jason looks like he's been working out? Show me the proof. Show me the proof.
Wasn't Jason doing this Peloton race, Neil, with like Joel from Pre-Market Prep?
Joel, I don't know. Jason starts a lot of stuff. Like, hey, Jason, are you on keto right now?
I know Jason was big on Peloton. He doesn't know, but I know his score.
Yeah, Jason, show us the guns, man. Show us the guns. Guys, we're going to get started in about 5 minutes, maybe more like 6 or 7. You know the drill, and those of you that don't, participation is rewarded. Ask thoughtful questions. Get them in there. Get them out of your system. All right? Get the most out of this session. Make us work for it. You know what I mean? And Michael S. 500-ish account. We all start somewhere, my friend. We all start somewhere. Nishaheen is in the house. He has entered the digital building. Guys, participation is rewarded. Ask unique questions. Smash that like button. If we get up to 500 active viewers, I will start dropping $100 gift cards. $100 gift cards once we hit 500 live concurrent viewers. Share this video with your friends. Make it happen. They will thank you. Trust me.
I already shared it. I already told my mom what's up. Like, it's going to be lit today. She's watching as well. So how many likes do we need, Neil, to unlock the giveaway?
We unlock the first giveaway at 100 likes. All right. Your mom only gets 1 like. All right, she can't make multiple accounts and get in here and be gaming the system, Mrs. Rodrigo. Okay.
All right.
Guys, let me get a sound off. All right. Once again, tell me if this sounds like you. You've bought some calls here and there. Maybe when you thought the market was about to go down, you bought some puts here and there. You weren't really sure about which strike price to choose. You weren't really sure about which expiration date to choose. And you ended up going into the red pretty quick. And you really didn't understand why. Give me a 1 in the chat if you've experienced that. I know I have. Give me a 1. If you just weren't sure about that strike price, just weren't sure about that expiration date, and you saw a color you didn't want to see in your portfolio. Sound off with a 1. Let me know. Excellent, Jen. You're in the right place. Okay, so we've got some 1s. We've all been through it. We've all been there. All right. So it's time to demystify options. All right. That's what we're here for with Nick Shaheen, to demystify options. Learn to stop guessing. Have a plan. Know what you're doing. Make informed decisions. Know how to look at a chart and come to conclusions instead of just seeing chaos. All right? Find the trigger for a trade. Don't just trade for the sake of trading. Go in with an idea of why you're doing what you're doing and when you're going to get out. Heather, we've been there. Chickened out on placing options. Options rule. Options give me life. All right, Heather. We are gonna convert you. You just got to do it right. That's all.
Heather's been around here for a while. I've seen her in the other educational videos that we do all the time, Neil.
Heather, you got to tell all these new tadpoles what they got to do to get that first giveaway unlocked. We're gonna make sure everyone's rewarded for that type of participation, Heather.
It's just happy, Neil, to see everybody that's like really interested in the education, because that's really when you see, you know what, like, let's just assume, Neil, you'd be a teacher and you see like 3 students grinding hard. Like that's what I'm seeing here, you know, like people really wanted to take an interest in their education. I love it.
Yep. See, Heather, you're a star pupil here. All right, so we've got the ones in the chat. Hopefully we're getting the likes because I want to shower you guys with gifts from the heavens. So we got to get those likes up. And share this video. Post it on your Facebook page. Let people know. Put it in your Discord. I know I have a Discord with some of my buddies. I always drop these videos in there. We love stocks too, Brooke.
All right, what do you guys think? It's top of the hour. Nick's in the house. Is it time?
Guys, I think I'm ready to bring Nick on and start learning about how to get ready for this week with a foundation of good technical understanding of the market, some good stocks, some good picks, and then how to approach it with some options trades. But are you ready? If you're ready, if you are like me, put me in the chat. Put me in the chat. Me. To let me know that you two are ready like I am.
Not meh.
Not meh. I don't want a meh. I don't want an M-E-H. I want an M-E. Meh.
Let's go.
All right, keep them coming. I want to see those me's. All right, Brooke.
Let's go.
All right, guys, get your questions ready. Remember that your participation will be rewarded during this session with prizes. Without further ado, that is enough hyping up and dance party from the trading squad. It is my pleasure now to bring Nick into the stream. Nick.
Hey.
How's it going, man?
It's going well. So you're going to see ad popping up because I had the mix up on the schedule. So I borrowed somebody's laptop and I am mobile. I've got a golf course behind me. So if you hear, if you hear noises and if you see pop up here on TradingView, I did not log in with my credentials because, anyway, long story, we're ready to rock and roll. The message will be the same regardless of what we use. Luckily, It's a nice laptop, so it shouldn't be a problem at all.
All right. Well, I will let you kick it off. But for the folks that don't know you, do you mind doing a brief intro?
Sure. So I'm Nick Shaheen, and I've been working with Benzinga for 10 years, good solid 10 years plus. We're doing good work because we're basically demystifying options. That's the concentration of our efforts. And we're doing something right. Otherwise, you guys and girls won't be coming back this often. So we're lucky to have the opportunity to do this. And for me, the challenge is to bring it down to plain, simple English, it being everything I've added to my toolbox, as you should. And that's what you're doing here today. So I started by being just a general investor, buy stocks for decades, and then got into options. They were kind of scary. And then after a while, they becomes like, oh, you get a couple of aha moments. And it's like, wait, it's that simple. and then you just repeat a process. So not everybody has the same process. Hopefully I'll get you to yours. And there's some good charting skills there also to be learned, very basic stuff, demystifying that as well. So I think today will be good. I can't see the questions because if I change tabs, I don't have more than one screen. Usually I have your questions streaming on the other end. So I'm going to need help from the facilitators in the background to pop in and interrupt me with questions.
No problem.
Okay. So if that's not a problem, then I think the message will be great. I'm going to start from scratch, defining what is a put, what is a call in plain simple English, and then maybe going into one example to really hammer into one aspect of it and see where it goes with the questions. And touch on some of the more complicated things that can be done with options, and maybe center around the earnings, because everybody's looking at the earnings. How can options help in the earnings, and how can they hurt? So maybe if that's okay, I think that would be a good topic for today.
Yeah, I think that's top of mind for most people. So that should be really good, guys. And remember, if you got questions, we'll take care of you to make sure you get in here.
So I guess I should have logged in, right?
If you want, I can take you off stream if you want to log in.
Yeah,
otherwise you can
take me off for a couple minutes and see what I can do with this.
All right, guys, who wants Nick's password?
In the meantime, guys, don't worry. Nick is going to hook it up. I just want to let you guys know. Look, there's a few things here that we got to just set straight, guys, okay? Nick, being an options professional, has a very busy schedule. He's golfing right now, I guess. So I guess options trading is going pretty damn good for Nick, right?
Yeah.
He's
Okay.
from a golf course. But I want you guys to know that at the end of the day, we are here for you guys, and we're here to grind. Education. Jonathan knows about this. He's been around for a couple of years, and at the end of the day, that's our end goal. We are not happy. I am not happy. As a matter of fact, I am upset unless you guys get the education, because honestly, those are the mistakes that we want to avoid. But
don't let Rodrigo be upset. All right, we don't look at him.
Am I off? Can I log in? Is my screen still up there?
Let's see. Wait, hold on. No, I see your screen. You're definitely not in.
It still says join for free.
Yeah, well, get me off so I can log in.
Okay, yeah, you're off. You've been off the thing this whole time.
Okay.
All right, guys. While we're waiting for Nick, let us know which tickers. Oh, Zoltan's here. Hey, Zoltan. Hey, guys. While we're waiting for Nick, let us know which tickers you are watching into next week so that we can cover them for you. All right. This is what this community is about. You're interested in something that looks really good to you. Time for a gut check. All right. Time for a sanity check on your thesis. This is a great time to do that. And it's a really good example of what it's like to be trading with Nick on a longer term basis. So let us know your tickers, guys. Those are stocks, even cryptocurrencies. If you got cryptocurrency you want to talk about, we can talk about the technicals on a cryptocurrency. That's okay.
throw them out. Ultimately, Neil, we're learning the basics, and the basics, we are so lucky that they apply to everything. We're talking about technicals, right? You've seen crypto. Neil, you're the get technical guy. You're legitimately like the get technical guy. So you know about technicals, okay?
Yeah, I know a thing or two about some technicals. That is for sure. And what I love about Nick is Nick is where I want to get. Nick is the evolved version where he marries that with fundamentals. It's a big difference that it makes.
Okay, so I think I'm in, right?
Boom, baby. That looks familiar. That's Nick's. That is Nick's work environment.
Okay, under fire. I'm hot and sweaty now. All right.
Well done, man. Just relax. Everyone in through the nose, out through the mouth, and smash that like button.
Now I guess I have to buy the laptop.
You really
All
do.
right. So, okay, here we go. So first things first, thanks for being here. And I know the audience is growing, and the Benzinga team is doing such an awesome job with that, spreading the good word. So let's just jump in. Did you get tickers that you want me to hit first, or should we jump into options?
Let's hit some tickers first, and then let's do a little look into earnings. But I think some of these are going to apply. So let's start off. I'm going to go right up to the tippy top, the very tippy top. Chewy.
That's the first thinker they ask about? Okay.
It's Twisted. I've been seeing Twisted around here. He wants to hear about Chewy.
Listen, somebody smart. Look at this. See that my orange line? It says cup and handle setup, but big reversal just above it. So look at the opportunity. So any rise, breach from last week's high and the week before it, it's failed 2 times. Well, failed in quotes. That's the opportunity. But you know that the breakout is going to face big resistance here, whatever happened here. So if you're fast, you can trade it up or invest in it for a swing up, but realize that it could fail here. So know where to trail your stops and how long you want to stay in it. And if you want to take some off the table as soon as it breaks out. Buying the dips works because of the volume profile tells me that the market is interested in it here. And that's solid proof support. If it fails, it has more below it and then more below it. So if the market's correct hard, yes, it can come down to here. But it looks like a good breakout from a good base, rising higher low. So it's looking pretty bullish. You can't short this stock. You can just ride the wave and ride the breakout.
And just for our beginners, Nick, when you say that it failed twice, can you just say what that means
Sure.
on that chart for the beginners?
Yeah, so on this point in time, July 12th, it had a high and then it closed on the low of the day. So that candle there, if you can see it, it has a tail above. So they didn't hold the high of the day. In fact, they closed below the open. Friday was super bullish for the whole market. It was incredible. My gosh, it was like incredibly bullish day in the market. And then they had a little tail, but it was much higher close than before. So now they have 2 tails, 2 highs of the day. The high of the day Friday and the high of the day on 12th are almost exactly the same, and almost exactly the same as back here in April. So they remember that. So now the machines are remembering that. And then if the market is able to push it above it on Monday, Tuesday, and even better close above it, then the bears are tired. So the bulls, the buyers will overwhelm the sellers and they'll push through. Technically, it could be pretty big, as big as this up here this way. So it could hit 104, but know that there's going to be a lot of resistance here. Like whoever was stuck here is going to be selling once it gets there. They're going to say, thank you, I'm back to even. And this area is also going to be important. And this area, of course, that was the scene of an accident, so to speak, this whole drop. So it looks good, but don't forget to book profits.
That's gold right there. So just that's another golden nugget right there. If you look to the left, if you look to the past at those big red candles, that means there was blood in the streets. People lost a lot of value on their position, and if it gets back up there, then there are gonna be some people that want to sell because they can break even.
Also, this little candle right there on that day, whenever that was, February, that should also tell you that was an important point for the market. That day they crashed, but then they decided, no, wait a minute, we absolutely love it, and they closed way up here. So whatever happened, it's important. And you can see the same levels repeating themselves. Like, for example, check this out. I didn't make this stuff up. I just noticed it. Look at this low right here, and look at the low right here. They're almost exactly the same. And look at the base right here, and look at the high right here. So there are no coincidences. I didn't pick the sticker. Somebody did. So look at this. I put my mouse there and look at the crosshairs, how it goes and kisses all of these values. So if somebody says, charts are bogus and I don't believe in technical analysis, well, then you're leaving this tool out of your toolbox on purpose. And I just don't know why. It's if you don't know it, easy to learn. And even then you can join a group that does this stuff. I do this stuff all day, every day for everybody. So I love sharing this stuff. So if you don't know it, you just want to get it, then you ask and it's done. So it is, it's a tool. You have to look into it. And luckily it's easy.
All right. Next up, Nick, we've got Apple.
Yeah. Okay. Apple, the big guy.
Yep.
Yeah. Let's look at it. So it's going into earnings, and the outcome of the earning is a coin flip. And now I can almost hear the people saying, some people in there, I know it, they're saying, oh, they're going to blow earnings out of the water. Well, that's not what makes it move on earnings day morning after. If that's the case, I'll prove it to you. And think back to when was Apple's last bad earnings report? I don't remember one in the last 10 years, maybe. However, this was a bad earnings report reaction. This was a bad earnings report reaction. So 2 bad reactions on 2 good reports. So what it does as far as a report is not important, because it is what the perception, what the people expecting. It's not so much more the quality of the report. We know it's going to be a quality report. What we don't know is how people are going to react. So from an investment perspective, if my mom tells me here's some money invested in Apple, I'll say, Mom, why don't you wait out a little bit? You may miss out on some upside, but I think we will have better entry points. So a couple of, if I wait out a few candles here and there, that would be great. Otherwise, you're opening yourself to buying something a little bit too extended. So a dip closer to 140 would make sense. At 150, it was a short for me. I was on vacation. I popped in the chat room and I said, I'm buying an Apple put, not because I don't think it's a good company, just because I didn't like the way it rushed to 150. And then this happened. So I got pretty lucky from vacation. I booked most of it. I'm still holding one, and it's a lottery ticket on the earnings. I may close it before the earnings. I don't know, but I usually don't trade into the earnings. It's a lottery ticket. If you feel lucky, take your bet. Otherwise, the better trade is after the earnings when you have the intelligence.
There you go. There's a little disciplined risk management for you guys. Let's follow up with AMC.
Of course. So AMC,
always.
The opposite of quality earnings. I will go into my spiel. It's an exciting stock to trade. It's a horrendous stock to invest in, just because the company is literally broken. So this is the case where they say usually the opposite. The stock is broken, like Baba and Baidu. The stock is broken, the company is not broken. Here it's the opposite. The company is broken, it's trying to fix itself, it's got a tough road ahead, but the stock has never been better. So compared, like, I don't know where COVID was in here, somewhere, oh gosh. Anyway, so it was already here. This was COVID. So this is before COVID, when the world was perfect for AMC right here. And then it does this when the world was still crap for it. So I don't get the logic. They're buried in debt. The businesses were still closed. So it's definitely a trading phenomena. And if you're good enough and fast enough, I would encourage you just to simply trade it if you're good enough and fast enough. Otherwise, what is this? Sit on the sideline.
You have a gaming laptop.
I know. No, I assure you the person with it does not game. So anyway, so AMC, short-term lines to watch. 30.7 is important to hold because that was the last base. This was the last wall, so to speak. That was where they failed at 46.6. So that's your short-term ping pong. They're going to go ping pong inside of that range. And if you're a trader, then you chase the breach of those ranges. In other words, if on Monday, Tuesday, Wednesday, for whatever reason, they lose this point, they fall down here and they fall, they might come down to this area. And technically, it's like an inverse cup and handle.
Nick, can you draw some horizontal lines and shout out the numbers for those levels?
Yeah, so definitely. So this would be, look at that. I do already have lines and I will leave them. So I can't draw a straight line with this mouse, but save my life. So this is I'll usually say S loss. So it's a support zone if loss will carry lower. And the opposite, look, I expect sellers lurking. And the number is, rounding it up, just under 47, like 46.6 or whatever that peak is. So I expect sellers in that zone up here. But if the buyers break through it, then they show strength and they overwhelm them, same as before. They'll probably get to 55 or 60. But if you lose this number right here, 30.5, let's just round down a little bit, give it some room to breathe, then it could see 20 or lower. This is an inverse cup and handle, and basically they're fighting over two necklines. Which one will breach first? Right now, it's stuck in the middle. If you take a position, you're just guessing. And by the way, folks, I just want you to look left. Okay, just look left and see what happened at this level months ago, right here. Big failure, and then suddenly a huge base, and then confirm the base, and then again here, not so close. And so the charts do matter long term. I think that was the highs. Yeah. Okay. So that's AMC. I think we beat it to death.
So Nick, I've got a broader question.
Yeah.
How far out do you buy an option?
Okay, so that depends on the goal. I personally don't like to do same week because then time, it's critical. And if you're not fast hands and I'm busy during the day helping traders, I will make a mistake. So I would rather pay up a little bit more extra and buy an option way out. And this is the trick that people fall for. So if you're doing an options spread and you're buying it, we'll talk about that in a little bit. You definitely don't want to do next week because they cost the same if it's close to the money, close to current price, whether it's 1 week or 1 month or 1 year. They cost about half the width of the spread. So why wouldn't you pay extra? Of course, if you buy it for that same week, then you gain the fastest if the move happens in your direction. But if it doesn't, then you lose the fastest. So it's a balance between what's your risk tolerance? So I prefer longer term, and there's a good balance somewhere. So find the one that works for you. And then you get to play around with the earnings. So buying next week's options, you're going to pay extra. There's something called the implied volatility. So I guess we can jump in right now.
Really quick, we're getting a question about the subscription from none other than Twisted. Thank you for the question. Does the subscription to Nick's chat room include unusual options activity in Pro? In the Pro, I assume you're talking about Benzinga Pro. Twisted, the answer is yes. And if we have time, we'll talk more about that chat room and access to Pro and all that kind of stuff. Thanks.
All right. So I like the avatar name. So this is Facebook, sorry. Pretty stable stock. There's something called the implied volatility in options. And this is basically how nervous the options are about this stock for that particular week. And notice, first of all, this is called an options chain for the newbies. And up here, we have different dates. So every date has got its own table. I picked next week's for a reason. And then, so these expire every week. So next Friday, the Friday after, and then this one is the monthly August, which is 4 Fridays away from next Friday, and so on. And they go out to next year even. So the implied volatility is this column right here. And it's basically like the VIX. You've heard of the VIX volatility ETF. So this is the implied volatility for that particular stock for this particular week. And notice it's 51, 52. That's high. I'll prove it to you. The week thereafter is lower, 40. So that's already 20% lower. And then it should drop more out. Why is it higher for next week? Because they report earnings and then it normalizes. It doesn't drop too much below that. Yeah, it sticks around 30 or so. So if I buy an option for next week, I'm paying up 20% extra just because it's an earnings week. So the smart thing would be to sell these and buy something out further. So that if somebody wants to get fancy with it, if somebody wants to do a calendar, if we have number 4 option traders in here that know what they're doing. So this is this, I don't want to call it skew, the differential. Like I sell something more expensive that's going to get super cheap the day after it opens on the reporting day. And I buy something against it longer term. I got to be careful not to open risk doing that. So this is just for somebody that knows the option, but it is important. Timing is important. I like time on the clock. Like if I just wanted to go long Facebook, I would probably go with August or September call spread instead of buying single legs. Single legs, by that I mean if I buy a call, I can make a lot of money quickly, but I can lose a lot of money quickly in one day. It could drop 30, 40% in one day. That's just not my style. If I buy a call spread, literally it spreads the risk. It makes it a slower trade, less upside potential, but good solid base hit that could double my money or triple my money. What's wrong with that? Versus make a huge home run every time I try to step at bat and whiff. So that's the balance on the timing question.
And just as a quick note here, I am leaving some notes here in the chat. Just for clarity, these are not recommendations, but rather ideas of how you could structure a trade. So I know you just wanted to clarify that, as I'm just simply leaving some notes about these structural ideas that Nick is sharing.
Definitely, and that's why I did not refer to any particular legs, because it's to illustrate the point and answer a question as to what timing, which one do I buy at what contracts out in time, how far out in time, how close. It depends on the goal. Like, for example, we were talking about AMC short-term chart. Well, I don't want to go too long-term with that. It's a short-term trade. I should have a tight stop. So I take a risk. I risk X dollars, and then I decide that if it worked or it didn't work. It's kind of like trading the futures. They take a trade, they set a stop. If it hits the stop on the winning part or the losing part, they get out. There's no emotion. They don't try to save it. It was a trade. It worked or it didn't work. So that, in that case, yeah, I could do single legs short term. But as a swing trade investment for me, style-wise, I like it a little bit of time, 2-3 weeks at least.
Awesome. And the one of the titles of today's session was basically how to buy or sell calls. And some people here are probably so new, they don't even know what the leg of a trade is. So can you just define what a leg of an option trade is?
First, let me put a rule for everybody in this room. You are banished from selling calls naked. So let's define that part of the answer. This is something I wouldn't do for myself, especially in this environment. So let's define the leg. So we're looking at, still at Facebook, we're still looking at September for no reason. First of all, these are contracts and they have time frames, they expire. This one happens to have 54 days on the clock from Monday. So actually, yeah, from today. So it's a contract, so there's a buyer and there's a seller. And there's an express price right here. The mark is the middle between bid and ask. I don't even look at bid and ask because I'm trading very liquid tickers. So I know the mark is the price plus or minus a few pennies. It's sometimes also called the mid. It's basically the exact middle of bid and ask. And so if somebody wants to buy this, there is a buyer of it, and then there is a seller of it as well from the other side. So one person is buying it, one person is selling it. They accomplish opposite things, but in this case, it could be a win-win situation. We'll get to that in a little bit. That's called a leg, one leg. Now, if there are two legs involved, one bought and one sold, regardless of which way they're done, now we have two legs to one options ordered. So this is in order, and now there are two legs. Each one of these is called a leg. So when I say naked, it means there's only one leg, sold or bought. One naked put, I sold a put, I bought a put, it's a naked leg. Or if I sold a spread and I bought a spread, that's what it looks like. And that could be on the other side as well. So this side here is all puts, and on the left side of the screen is, switch it here, these are calls. So this side is the call side. So I know what you're thinking, that calls are bullish, puts are bearish. That's not correct. It's what you do with the call and what you do with the put, and we can explain that a little bit later today. But to answer your question there, a leg is simply one of these contracts, whether a call or a put, done alone, one naked, it's called a leg. If I do two of them, one bought, one sold, then it would be a spread.
Thank you, Nick. I'm sure that's helpful for a lot of people here. And I'm trying to, and just to repeat that, you said, to buy one and sell another, that would be a spread.
Yeah. So let's go. If you want, if you're okay with that, how about we just define a put from a very practical matter? Let's say somebody owns Facebook stock. Going into earnings, they're a little bit nervous. It just rallied 5% or 4.5% in one day out of nowhere on somebody else's earnings. That was an incredible feat. So I've got profits. How do I protect them? Again, this doesn't apply to everybody. It's just a way for me to define what a put is. So in essence, a put is a contract that the buyer takes control of something. So when you have a car and you want to insure the car, you go out and buy insurance. You spend a premium and the company that sells you insurance has a liability on its hands until the contract expires, right? So there's a price, they negotiated it, I paid it because I want the insurance. So in this case, if somebody just wants to protect themselves at $330 per share, then what they do is they go out and buy it. They buy a put to cover their 100 shares. Each contract represents 100 shares. So now we know a few things about options. Now, number one is they are contract. Number two, they have buyers and sellers. Of course, there are two sides to every story. They have contract negotiated a price. Like my car is worth 10,000. I don't want to insure more than 10,000. In this case, my stock is worth 330. I don't want to lose anything behind 330. That's an example. So they negotiated a price. That's the strike price. The mark, in this case, I'm going to round, it's $5. It's actually a little bit less. So $500 will cover me for 100 shares. What does that mean? If in the next 54 days, I choose to do it, I can call up my broker and say, hey, I reserved the price to sell my stock at 330. I bought insurance on that 330. Please execute it. So I exercise my right as the buyer of the put. Well, guess what? The other side who sold me that put is on the hook. They promised. They took my money. They collected my $500. They promised they would buy my shares. They promised they would fix my car. Same. So they have no choice. They wake up. They have my shares in their account at the price of 330. If they're lucky and the price is higher, they made money. If it's lower, then they may start losing money. So their break-even point is lower because they collected $5 for it. Remember that there's a premium to be paid. So the break-even for the seller is 325. I'm rounding. So that's why I said it's a win-win situation. How is that a win for them? Well, maybe they wanted to buy the shares at 330. Now they bought them at 330 and they don't lose money until it falls below 325. So they won. They accomplished their goal. I accomplished my goal because I bought insurance and I got to use it. So it's a win-win situation. For them, it was a bullish trade. They wanted the stock. For me, it was kind of a bearish trade. I was worried about the stock. So that's the ideal way of using a put. Somebody wants to buy insurance. They go ahead and buy the insurance. Somebody is willing to sell the insurance because they want to buy the stock. That's the important piece. I don't want anybody to go out and start selling. I don't think it's a good idea to go out and start selling puts left and right, especially when markets at our all-time highs, because then you find, you have one bad week and then suddenly I'm like, what? I need to buy this stock and this stock and this stock. Wait, that's not the deal. So I only sell puts in stocks that I really want to own at that price. So that's the tricky part. So this is the easy way to define that. Now, opening a whole new chapter on using puts in a bearish way. If I wanted to short a stock, I can use puts to do that. So from a buying perspective. So if I think Facebook is too high. I just told you I bought a put in Apple. So let's go there actually. We're not looking just at Facebook.
And just while you're doing that, we are getting a few questions about the subscription in the chat. Okay. If you can just hold those questions for a little later on, we'll get to subscription stuff later on, but we're just trying to stick with the education for right now. And thanks, Nick. Sorry to interrupt you.
Hey, no problem. Anytime. So I just said I shorted Apple. Okay. So how did I do that? At 150, I was on vacation. I logged on and I saw Apple was rising into 150. I was like, what is happening here? So I said, you know what? I'm going to buy a put in Apple. I can't remember exactly which one I bought. Let's go with the 145. Okay. So I paid $1.80 for it, $1.75. I know that number from the top, off the top of my head. And then Apple fell apart the next 2 or 3 days. So my $1.85 turned into like $5 or $4. So why? Because if you notice, the price gets cheaper the further away from current price. Like right now, Apple closed at 148.50 on Friday, right here. And then if the lower you go, the cheaper the prices of those puts become because they are less likely to happen. Okay, the odds for them to happen are less than where it is right now, right? And as you go up, they get more expensive. So price fell. And I can't remember to where, but we'll look in a second. So price fell. So my $1.75 turned into like 4. Let's use 4 for round numbers. So now I made money out of thin air. And what I could have done is just sell the put back. So I bought it for 175. I could sell it for 4 in 3 days. So I made money quickly by guessing correctly. Okay, so the guessing part is important. I did not have a reason to do it other than I thought it was running too fast. And that's not a good way of doing options. But I labeled it as such. I said, this is a lottery ticket. I'm not investing a fortune in it. I just want to pick a fight with it for no good reason. So, but it illustrates the use of a put to short a stock. So you've heard of people trying to short stocks. So let's back up off of options and define how people short stocks. And it's really insane. I encourage people, my family is banned from doing it. Anybody I know that does it, I would smack them upside the head. Figuratively, of course. I'm not a violent person, although I do fight for a sport. So the way people do short right now, and that's why they get in trouble. You don't have shares in Apple. You think Apple is going to fall. Like if I thought it was going to fall from 150. So what I would have done, I would have said, hey, Bob, give me your 100 shares of Apple. I know you have them. I'll return them. So Bob lends me 100 shares. I sell them right away. And I put the 150 in my pocket. And then if I'm right and Apple falls, I buy them back and return them from a lower price. Bob got his 100 shares back. I made the difference between 150 and 146, wherever it fell to. So I made $4. So the problem with that is that when I did my short, I only risked 175. This risk is unlimited because if Apple did what GME did or what AMC did, I'd go broke because my risk profile is unlimited to the upside. I'm losing money for as long as Apple is rallying. And that is not a risk profile that I like. I use options because I can define my risk and define my odds of success. So this is bogus that people do this. I mean, unless you're somebody with billions, it's really, even people with billions. I mean, hedge funds have gone belly up shorting something. GME, of course. So not for me. So selling a call naked, like if instead of buying a put for Apple, I could have shorted it by selling a call. Also not good because that's the same as selling the stock short because what I'm doing if I sell a call, I would never do this, is I'm promising that I have to deliver stock at that price. So what if Apple goes to 300? I'm losing for as long as Apple is rallying because I'm stuck at 150 short. I need to deliver a stock at 150 when I'm selling an option. So the buyer of that option on the call side bought the right, locked their price for Apple for a month at 150. So that's another, let's go into defining what a call is. So we already know what a put is. It's insurance. People buy it for insurance, kind of define it that way. The call, I'm also buying a right. So the buyer is always in control in options, not the seller. The seller is taking the risk. He or she are the market maker. You've heard the term market makers. They sell the straddle to make the markets. So the buyer is in control. They're taking, they're spending the money. The market maker is making it happen. So when I buy the 150 call in Apple, let's say I want to participate to the upside. I don't have shares. I would like to get shares and I would like to lock my price at 150. Well, I could buy 100 shares and spend 150, or I could spend $350 and lock my price at 150 for a month. So how does that work? So I spend right here $355 for 100 shares, and I bought a call. I basically reserved my price. Somebody on the other end took my bet and said, hey, I've got shares. Maybe they do. Hopefully they do. If they have shares and they're selling a cover call, that's cool. I'll give you my shares at 150 if it goes higher. So they collect this premium from me. I'm happy. I'm getting into my stock. They're happy. They're getting out of their stock. Happy. Hopefully they have a shares to cover it. So that's what that call gives me the right is I'm locking my price. So if Apple reacts positively this week, and it spikes, that 355 turns into 5, 6, 7, whatever. See how they get more expensive? If it rallies. So then, do I need to buy the shares? No, I can just sell the call for a profit. So it's pretty flexible. People use options for what they're intended for, but a lot of people don't. They just use it to make money on the price action of the stock. So the definition of the option is pretty convoluted, and you can read up on it in the books. They all define it very properly. But basically, they're going to tell you one thing, that they are contracts. They're going to tell you another thing, that they have a time on the clock. And they're going to tell you that they have an agreed upon price, which is the mark. And then there's a buyer and a seller. You hear on CNBC sometimes saying they are buying this call or this put. And I always get upset about that because no, they're not. There's a seller on the other end. So they are transacting that. There's a buyer that thinks one way. There's a seller that thinks the other way. I don't know the buyer. I don't know the seller. Therefore, I'm not going to assume one's smarter than the other. Therefore, I will trade my own trades. Thank you very much. So make sure you know what you're doing. Here's the biggest threat of options. They are great. They have better bang for the buck. There's no doubt about it. They have better bang for the buck than buying shares or selling shares. However, because they move fast, if I do them willy-nilly, I have the opportunity to lose very fast. So here comes the discussion about odds making. So sometimes I start with this. I used to start with this. And so I'm going to give you the opportunity to think about if you can define risk. Unfortunately, I didn't bring a scratch pad here on this laptop. I have a shortcut for it, and I don't want to go hunting around their laptop and uncovering their stuff. But so the definition of risk, if you want to think about it for a second, see if you can, if you were speaking to a whole bunch of people, how would you define risk? And I bet you most of you, all of you, will get the one piece right about how much money am I going to lose? What's the maximum risk? What's the most I can lose? How much money is at stake? Everybody has that. So, but in reality, that's only half of it, because the more important piece is what are my odds of winning? Okay. When I buy shares, my odds are 50-50. Really, I can give myself edge by doing homework and having an edge over the other person because I did homework, I found this, and now I know that the other person doesn't know it, or odds are, and therefore I think I'm smarter, I'm going to do a better deal. But statistically, it's a 50-50 shot. Same with buying options current price. So 148.50 now. If I buy this put or I buy this call, my odds are 50-50. And luckily, here's the greatest thing about options. I kid you not, this is like the greatest thing about options, in my opinion, that they tell me what my odds are by me looking at this one, the delta column. These are the columns I have on my tab. I don't have many more than these. So I usually have the mark, the change, the delta, because that is my odds maker. I'll tell you what, look, anywhere near current price, the delta is 0.5, 0.45, 0.5, plus, and forget the minus, that's for puts. So the definition of a delta, that's the Greek part of options, is convoluted. It basically says how much this moves when the underlying moves $1. It's gibberish that I can't use in real term really to make a judgment as to what I want to stay in this trade or not. For me, it's the odds maker. So I developed a style and I like a certain odds to start with. So when I'm selling, I start at a certain level. When I'm buying, I start at a certain level. So that's the part I manage. If that level, the delta, changes too much out of my parameters, then I say, you know what? I lost my edge. I don't know if I should stay in this trade anymore. I probably will exit. So that is my odds maker, my decision-making point to manage my risk. Has my risk stepped out of my profile? So if I like to sell options at a very low odds, meaning the odds are in my favor because the buyer is going to lose, and then suddenly price goes against me and those odds have become 50-50, and I'm losing control over that, then I say, now I'm in a coin flip situation. I'm going to get out and lick my wounds and try to deploy risk somewhere else. So delta is an important part of options because it's really, I think, where people fail or succeed if they're really on it. Manage the risk, and really the part you manage in the risk is your odds. That's my opinion. So there are a whole bunch of other Greek letters you can study. Theta, for example, they love to say it. It's really time. And when you buy options, time is against you. For example, remember that option I said, oh, okay, I'll buy the 150 call in Apple. That'd be great. But as soon as I buy it, I'm on the clock. I need Apple to move like now, man. And I need it to move fast. So every day it doesn't move is costing me money because now I have one less day for my opportunity to come to fruition. So the option loses its value one day at a time, 1 minute at a time. And conversely, that happens on the put side as well.
Thank you. Wow. I hope all of the beginners on here are taking notes because this is a wealth of information from Nick here. Nick, we want to continue on with the education here. Just we're getting a lot of questions in the chat, and it looks like Rodrigo was already answering some of them in the chat. But Rodrigo, are you there?
Yeah, guys, we're getting a lot of questions about the subscription, and can we please leave those subscriptions until the end because we're going through the education right now, and the education is more important, and that's what we're trying to focus on. If we do have time, we're going to get to the subscriptions at the end, but quite honestly, let's focus on the education because that's why we're all here for, guys.
Okay, sorry. I thought my bad. I might have brought you on prematurely. Sorry for the interruption, Nick. Let's keep it going. So you're talking about theta, basically, which means that has to do with the time left as the values decay, right?
So theta is time. It's just they chose to use Greek letters for it to sound fancy and intimidate everybody else.
So we can feel good about ourselves now because now we know that theta means time. So we're part of the secret club now.
Yes, we are. We are definitely in the know. So here's the trick. Okay, now again, this is where all options classes start. They love to say, you go to attend the class for options, which I've never done, by the way. And if you read a book about options, which I also have never done, I learned my options through School of Hard Knocks. And I did a lot of reading individually, like about facts of individual things. And I found out that the prevailing meme about options is that most of them expire or worthless, which means the buyers are losing most often. Therefore, the only decision to make is which ones do I sell? So ideally, I wouldn't want to buy any options. I would just want to be selling them. That's why they say market makers never lose, because market makers sell. They don't buy options. So the idea is to try to develop a system where I can sell stuff that's low risk, relatively high yield, consistent, predictable over time, meaning develop a system where I can take base hits and an occasional home run versus try to swing for the fences all the time. I'll give you an idea. So if I sell a put spread, I'll get to what that is. But if I sell, okay, let me rephrase. What is easier, to find out where a stock is going in a certain period of time in the next 3 weeks and try to nail that place and buy a call and try to have it run to it? Or is it easier to find out where it's not likely going to go, all those other places where it's not going to go, and sell some risk there below support? That's my ideal setup. If I have a company that I like and I've done homework on and I know the chart and I think that it's a bargain at X level, and I go in and I sell a spread, I sell some risk, sell a put or a put spread below that level, that's an ideal situation for me, because the worst case scenario, first of all, if the stock rallies, I win. If the stock doesn't rally, I win. If the stock drops a little bit, I win. The only way I could lose is if the stock just collapses past its support. And even then, my loss can be mitigated if I'm willing to own shares, and that's a longer conversation later down the line. And how do I defend the spread? So since I did say spread 3 times already, I think 2 times at least in the last 2 minutes, I owe it to you. Let's talk about spreads a little bit just to define them. So we spoke about puts. I'm going to go back to the Facebook because it's still a visual probably from what we just talked about. I think it was September 350, this one. Okay. So I could buy this one put, or I could buy one and sell one. So now I have a spread. Now this is called a vertical spread. In this case, it's bearish. In this case, it's bullish. Okay, so this is called a bull put spread. I call them credit put spreads. This way, there's no mistaking. I should see a credit when I open the trade. It says limit credit. I will be getting paid to open this trade. I don't need a rally to win. I need price to stay above it. Again, this particular one is not a recommendation. We're going into options, etc. But this is a visualization of a credit spread. So how does this spread win? This spread wins if price stays above 335. Then I keep my buck. I'm rounding, and I made 20% in this case yield on risk. So that is a sleepy way to trade. Find a credit spread I can sell comfortably, knowing that it's a good company. The worst case scenario is me maybe owning shares or me having to defend a good stock at a good level. Versus the buyer of that spread, if they're trading and they need a drop, a considerable drop in Facebook to win. Now, Facebook just had a huge run. This is a spread I will not do because I'm chasing. I don't like to chase. I'm man enough to say, you know what, I missed it. I'll catch it on the flip side whenever it collapses, and it will collapse at some point. So this spread needs a drop. I need price to go whoop in order for it to get hot. So the buyer that pays 90 cents for it, if the price of this stock falls fast, that 90 cents may double, triple. Maximum value is 5. So if it goes to 0, if Facebook falls to 300, the maximum value is 5. So this person could make $4 and change. The person that sold it would lose $4 and change, but they have an opportunity to dance out of it. So it's not the end of the world. I've been in situations like these, and if done in the correct stock, it is definitely not the end of the world. Trust me. I did it in US Steel last year at $9. It fell to 4.76, and I still made money because the people just mismanaged their trade on the other side of me. I don't know what they were thinking. They did not give me shares. But anyway, so this is a spread, and it's called the vertical spread. Now, this can happen also on the other side. This is called a vertical spread, but it's also a call spread. So debit call spread is a bullish spread because you need a rally, or a bearish call spread. I also call it credit call spread. You need price not to rally and stop at 380. So now we know what a vertical spread looks like. It could be on this side. It could be on the other side. And I'm just going to move them here to put them as visual here. Okay, so it could be on this side, it could be on this side. And these are not tradable level, folks. I'm just showing them for visual purposes. So that's a vertical spread. That's a vertical spread. That's a vertical put spread. And that's a vertical call spread. It's behind this thing. Call spread. They can be sold, they can be bought. This particular one here, if you're interested, is called Iron Condor because this is a sold spread, so is this one. So now this is a range trade that needs price to just stay in the middle. If you've ever heard the term Iron Condor, we're not getting into it right now, but this is what it looks like. Okay, it's a fancy term, but it's a pretty good trade, yeah.
I don't want to interrupt. We're getting a lot of questions about the subscription, and I just want to pretty much parse it down because it's just too many questions, and I want everybody to get the education. So, guys, for tonight, you're gonna get 50% off Nick Shaheen's options mentorship. That means that you're gonna get Benzinga Pro, which includes full access feature to data research, where you can get unusual options activity included. You can get block trades, price spikes, chat rooms. Honestly, the chat room is the biggest point of the whole Inner Circle options mentorship because you have access to Nick 24/7. 24/7. Give me a one in the chat if you realize and you understand the importance of having Nick Shaheen available 24/7. So that is included. Yeah. And Nick does work a lot. And look, hey, let's be real, guys. Nick has a family. Nick has a life. But ultimately, Nick loves you as a subscriber. And that's what's most importantly you're here to figure out. Because you see him grinding every day. Look at him grinding right now. What day is it today?
Oh
Sunday.
my gosh.
It's Sunday, Nick. I forget the days because we go every single day, so I don't even know what day it is, Nick.
Yeah.
But you go so hard.
I appreciate it.
But yeah, this is a sneak peek. This is a sneak peek. Ladies and gentlemen, this is a sneak peek of Nick Shaheen. He will give you 10 times more of this in the chat room. So you're not even getting like the full value.
Okay,
this is Nick on a Sunday.
Wait. So the in the chat room, there was a link this morning to get into a 2-hour webinar, covered 65 tickers and a strategy for the whole week. By the way, that happened this morning. So the members that were in there got to sit in and request whatever tickers they wanted. Literally, it's usually an hour. It went for an hour and 50 minutes.
Wow.
So there you go. That is a little bit of a preview of what you get inside that chat room. Guys, are you guys familiar with Benzinga Pro? Nick, would you mind opening it up so we can show folks?
I'd have to unshare.
Oh yeah, I forgot. Yeah, no worries. I think I can work that out.
Can you take it? Can you steal it from me? Because I can't do it from here. I really can't.
Yeah, I can.
Okay, so I'll rely on you for that one because I don't remember my user, but I do remember, but I don't want to do it on this laptop.
Yeah, it's all good. Just a reminder, folks, Nick is on the road and he's using his buddy's laptop. So this is a special on the road version. But guys, the Benzinga Pro options mentorship plan is giving you full access to Benzinga Pro with the unusual options activity indicator, which we'll talk about a little bit later. If you're familiar with unusual options activity, that should probably prick your ears a little bit. But we're going to give you that stream of signals along with the live trading room with Nick in Benzinga Pro. So Benzinga Pro is our flagship due diligence tool, and it is the best damn due diligence tool on the planet. True that. And yeah, I really mean it when I say this. A lot of time and development hours have gone into this, and a lot of feedback from serious traders and new traders have gone into making this product the best tool for discovering opportunities in the market, very simply put. But there's a lot of stuff going on in here. I'm not going to go too into it. I'm trying to truncate this just so you guys know that you can get in here, and you'll also get access to a chat room with Nick inside the platform where he's giving you ideas every day and you're bouncing off your ideas off of him. And sorry,
so
Nick.
I have a question for you, Neil. How did you guys make it to be web-based? Because the way it loads, I mean, it does so much. I would expect it to be like a Thinkorswim product where it had to be a desktop version where you have to download it, because what it does is just incredibly efficient.
Yeah, it works. It's very snappy for what it is. We have a mobile version of it out right now. You are able to open it on your phone. It's available anywhere. You can use our live audio squawk anywhere. But I don't want to go too much into this. I don't want this to turn into like a sales pitch, but we are giving away, for anyone that signs up now, you can probably see in the chat the link, half off Benzinga Pro plus the Nick Shaheen mentorship. And we're giving away a laptop with that when you signed up, because we want this package to be the best package for someone that's really starting a trading journey, so that you have everything that you need to get going. Benzinga Pro really has all of the data, all of the tools, everything that you would need to do any of your own research. It's got the charting tools, just like what Nick is looking at. It's got all of these screening tools for you to discover stocks that match your parameters. And then it's got a lot of options activity, several things. It's got a calendar. It's got 2 live streams of data for options chain data that allow you to see what's going on in the options market, so that you can get an idea of what the smart money is doing, going long, going short on particular stocks. So yeah, and Noah here is saying it's got an ROI attached. The idea here is that we're giving you, like, this is an investment. We're trying to give you something that you'll be able to pay yourself back for. I think of this as like really the best gift that one could possibly buy themselves if they're serious about getting into the markets. So if you're interested, you can learn more by clicking the link in the chat. There's also a link in the description. But this will give you access to Nick's trade ideas every day, that mentorship, the guidance, Sunday updates. And he said, there was like 65 tickers reviewed, which is, I mean, that's got to be a record, I'm pretty sure, reviewed. And the idea here is that you're learning to think and trade like someone that's been doing it for 20, 30 years now. I don't want to date you, Nick. But guys, go on and get in. We have 30 of those laptops available. When you go to the checkout, you should see a little pop-up that mentions the laptops. Let me know if you don't. We might have to update the checkout. We've gotten some folks saying that it doesn't show a picture of the laptops, but we only have 30 available. So the first 30 people that get the deal now tonight during the session will get that laptop, and it's a good laptop with the we consider it a trading laptop with the hardware to run all of the tools that you need to run with a minimum of 8 gigabits of RAM. So there you go, guys. That is the deal that is available to you guys for being here now. But I want to get back to, Nick, what you were talking about and take some more questions from chat. So guys, remember, participation is rewarded here. So drop those questions in chat. And Nick, let me know, did you answer a question about the implication of a wide bid-ask spread?
I did not answer it, but I did kind of say I don't do it. So I will address it right now since you mentioned it. How about that?
There you go.
Okay.
Let's do it.
But first, I want to put I'm not a salesperson, but I can tell you the biggest benefit I would see from somebody that's looking into a program like this perspective. There was nothing like this when I got started. And to have a room where I can just discuss things and learn things for a whole year. I'm pretty sure courses cost more than this. I'm very certain of that. And to have the tool and then the actual opportunity to learn back and forth, I'm learning from people in the chat room. There are a few people in there that have skills that I don't, like some harmonic skills that I didn't have. And now I do have them because I listened. And somebody else recently just got me into certain things about crypto. I listened, I did homework, and I added to my toolbox. Somebody else had other skills, and I do listen all the time to increase my toolbox. And sometimes I just don't because it doesn't make sense. So as far as bid and ask, so earlier I said that this is the mark, and usually it's if you click on it, and if I click on to trade it, they'll show me the bid and they'll show me the ask. And in this case, I'm comfortable that this is the correct price for it because it's Facebook. Now, there are some tickers to where I know from experience this doesn't work well, like Shopify, for example. The TQQQ, any triple leverage stuff and double leverage stuff, Ultra, for some reason, Lululemon, trading them, I have a hard time trading them from the options perspective. And if I do, I have to be very, very careful. And I have to make it to not be a very fast trade because under duress, like if the market is fast moving one way or another, it's near impossible to get a good quote and get a fill. And then you end up giving up. I remember the reason I got upset with Lulu is because, or Ulta was it? I sold a put, it was a winning put, and the stock was moving in my direction pretty fast. And I went to close and it wouldn't close. And like, what is happening? So I had to let go a lot and accept less than what I left a lot of profits on the table. It was still a win, but it was just annoying. Same with Shopify. So be careful. And doing single legs with those stocks is super expensive. Shopify, It's very expensive. So definitely it makes it a dangerous situation. So yeah, bid and ask is important to trade a stock that is liquid. All the top stocks are very liquid. All the top ETFs are very liquid. The GLD, the SPY, the SPX is not an ETF, it's an index. So it's also liquid. And the cool thing about the SPX, I guess we can talk about that topic. Why do people mess with I like the SPX a lot because it is cash settled. So there's no early action against you. So there's no assignment. There's no messing with that. They draw the line at the end of the expiration date and where was the risk, and they just do the math and they adjust it in the account. So that's good. That's how it's different from the SPY. So there's a lot to learn for a year. Trust me. Yeah. There's a lot of intricacies around dividend times, what you don't want to do, what you want to do. How can you play dividends, if at all, with options? How can you protect yourself with options? How can you sell covered calls? How can you buy puts for free? What is a straddle? How can you sell it or buy it? And last week, we tried something new in the options, which in the chat room, which I've never done before. So that was exciting. So I think I'm going to try it again. But it's too long.
What was it?
Well, it was kind of, okay, so people say, I want to buy a straddle. If anybody here knows what a straddle is, you're basically betting against the market maker, which is not a good idea. So basically, you take a long and short position exactly at the same place, so you need a big move in either direction. So I said, what if we can do it on earnings by buying the longer dated straddle and selling the current straddle? Like if somebody did it in Netflix, they have a chance of making money. But it was like a splitting hairs, and I don't want to get into it right now. So,
well, okay. So Nick, I'm muting you while I talk, just so you know, because we're getting some feedback. That is really interesting. Trading into earnings using a straddle. That's not something I've ever done. Guys, I got to respond to chat. Yes, you got to 100 likes and your participation is being rewarded. I'm going to drop in a coupon code for swag.benzinga.com so that you can get, let me see how much, $15 in free stuff. Is a $15 gift card for Benzinga swag. You can get a hat, you can get a mug. There's all kinds of stuff you can get. But remember, participation will continue to be rewarded throughout the session. So I will randomly at some point ask for something like, I need 5 unique questions about options trading that are thoughtful, not just like some nonsense. And if I get 5 good questions that Nick can answer for you guys that will benefit the whole group, then I'll drop a much bigger gift card in for you. So there is more to come. I'm just trying to stick to my word here and dropping this gift card in. So that is Trade Together, the number 2 at swag.benzinga.com. And I'm dropping it in chat so you can copy and paste it. So there you go. That's in chat. I'm going to unmute Nick. Actually, Nick, wait, hold on. I'm unmuting the wrong person. Hey, Nick, really quick. Yeah. Someone in chat laid down the gauntlet. I don't know if you saw that. Do you know what I mean? They laid down.
I'm not in there because I'd have to pop Windows. I don't know.
Yeah, I forgot. I keep forgetting. Okay. All right. So the gauntlet was laying down, and it was basically, can we construct one trade idea for the week ahead?
Okay. Sure. So how about we make it a fun trade on earnings, right? So it's a bet on earnings. So how about this? So I'm going to give you two opportunity areas that I think are in for next week. So I'm going to teach you. Whoops, God, I'm pushing a shortcut, the Alt R, and it's usually, I don't know why it's not working here. So here's the opportunity that I see for this week. I want to reset it here. Nope. How do you reset in here?
Wait, how do you hide all your drawings?
No, reset the chart. I've been using the shortcut. There we go. The shortcut Alt R resets it, but every time I hit Alt R here, an Adobe thing comes up.
Oh, okay. Yeah, the Radeon thing.
Okay, so there we go. So here's the opportunity that I see this week coming, and it's in the Dow. All right, so look at the DI. This is a weekly chart, folks. So you have to pay attention. I play around with time a little bit often, and just to see perspective. Check out how sharp of a line this is. So they've been fighting for weeks over trying to break up, and they're stuck. So we've had many mega cap companies do that. NVIDIA did it, and then it went to the moon. Amazon just broke out, and it's going to the moon. It should go to 4,200, 4,500 if the market doesn't fail or corrects. Yeah, you heard that right. So the Dow is itching to go. And the Dow prices itself relatively cheap in the options market to me. So I don't sell the DIA. That's an ETF for the Dow. It's pretty liquid. And I don't usually sell options in it because I never feel like they're expensive enough. So I don't get my money's worth. So if I were a betting man, I would bet on the Dow's breakout. And I can do that by buying a call, but I'm not going to mention one here. But the trade setup would be to buy a call or a call spread. Depends on my speed. If I'm a fast trader, I could do it with a call. If I'm not, I would use a call spread. And the call spread will cost me about $2.50, maybe $3 for $10 wide, and which means that I spend $3 upfront or $2.50 times 100, and then I could make $700 if it goes through to $10. So that would be the breakout in the Dow. Now, I should stop myself. What does that mean? So if I spend $300, I should say to myself before I put the trade on that, hey, if I'm down X percent, I should really get out. And what is that X? That X is different from person to person. Some people are okay seeing 20%. Other people are okay seeing 30%. Some people don't want to see any red. So pick a number that I'm comfortable with, and I should stick to it. And that'd be part of my trading style. So the opportunity is here in the Dow, and the opportunity is in the IWM. So the IWM is the laggard. So you've heard of rotation between tech and small caps. The IWM is the small caps. RUT is also a small caps. This is also an ETF. Look, it rallied, it's stuck for weeks and weeks and weeks, and now it's back down to the bottom. So pay attention to where it closed, this level. Look, this is an important level. If they can retake it and come back to here, I think with the right setting, if the reaction for the earnings was positive for everything, and if this busts out, it's going big time and the markets are going to go ballistic. So don't short markets just because you think it's too high. I think it's too high. I'm cautious, but I'm not shorting actively, and I will chase it upwards if it rallies. So the Dow, the IWM, watch those. And what's important, have to watch, that Boeing is in there reporting. It's a big piece of the Dow. Chevron and Exxon, I think, are reporting. It's a big piece of, they're big pieces of the Dow. Banks are a big piece of the Dow. Of course, Apple is a big piece of the Dow. So you have to monitor the earnings, and you have to look at the Fed, and you have to look at the GDP, I think. Isn't there a GDP report? So it's going to be a huge week. So be ready to chase if the breakout happens. That's the trade layout. How you chase it is up to you. I just gave you the two tickers I would chase it with, the DIA and the IWM.
Thank you, Nick. That is very helpful. And I just want to reiterate here. This is what I typed in the chat. So I just want to make sure that you have a chance to correct me if I'm wrong. What I typed was opportunity for this week. On the DIA weekly, fighting for weeks to break out, but they are stuck. Pretty cheap options. I would bet on the Dow's breakout with a call or call spread, but make sure you set a stop. And the number two, other than the Dow, would be IWM, correct?
Yep. And the IWM, there's an RUT. So folks, the RUT, the SPX, and the NDX, those are the indices. And then off of them, they have the ETFs, which are, in this case, the IWM for the RUT and the QQQ for the NDX and the SPY for the SPX. So if you're always confused between what's an index and what's an ETF, one is in the index and the ETFs are just, made up to track them. So, and the DIA is the ETF for the Dow. So the liquid stuff, the easier stuff to trade are the ETFs. But there are consequences. The ETF acts like a stock. So there is early assignment if something goes into money. Some of them pay dividends. You have to pay attention to that. You don't want to be short a call during a dividend payout, not payout, the ex-div day. So there are intricacies to where the indices tend to be cash settled and there is no messy things behind closed doors. But yeah, that's correct. You summarized it well.
And I know you didn't want to give a specific option, a specific contract here live in the public, but we do see one of your resistance lines or those horizontal lines on your chart there. So
I'll tell you what I usually buy. Okay, how about that? So I gave a dollar value, which could guide somebody to use it as a guidance. So when I'm buying something, I don't want to go too high, so it becomes too big of a lottery ticket. So 0.35 delta is comfortable enough if I'm buying it naked. But in this case, they're cheap enough that, instead of paying $500 or $400, they're so close. If I go 2 weeks out, so let's say I use not this week's, next week's expiration, it's $300 to buy the at the money call. So if I have a tight stop and I don't do it for an overnight pop, like if I see a breakout during the day, I wouldn't mind risking the $300 or the $340 or the $300 per contract if I'm on top of it for a trade. Now, if I want to try to swing it and not be so on top of it because I have a regular job, then I would do a call spread, something that looks like this. Okay, so this is not an actual trade. So I buy this and it costs me $380, or let me I buy this, it costs me $325. I sell this and I collect $175. So now I'm spending $150. I'm not spending $325. How wide was this? $6. So you can move it wherever you want it, $5, $6. What's the difference? The price, entry price, and the opportunity, maximum opportunity. So what's the maximum opportunity? So this is a debit call spread. Going back to teaching, this is a debit call spread. So this, I'm outlaying money out of my pocket. This, I'm collecting money because I'm selling. The end result, I'm bullish. I need a rally to win. So if the price goes through both, the maximum value of the spread is $5. I paid $1.20 for it. Therefore, the difference is my profit, $3.80. Who's upset about that? Nobody. You just turned $1.20 into $5. So somebody that did this only risked $3.25. If the same move happens, they would make a lot more money. But guess what? If we have one bad day, they could lose half their money in one day. So potato, what do you like? What is your risk tolerance? This is not me unless I'm actively chasing a breakout during the day. I'm not comfortable buying a naked call and sitting on it overnight and hoping for the best.
Thank you. And I just want to point out that some people earlier where they were talking about certain things were going over their heads, like the iron condor stuff. And I just want to say, if you're a beginner, don't worry. The main point here, and Nick, correct me if I'm wrong, these spreads allow you to increase your risk to reward ratio, right? So you might not hit the home run like buying a naked call. Like you're not going to, you'll cap the amount of profit that you can make, but then you also protect yourself against losing as much as you could. Is that correct?
They are self-hedged. So the trade becomes hedged against itself. So if you have one bad day and it's not a spread, you got nothing but losses. If you have a spread and you have one bad day, I'll show you. So let's use this specific example that we just used. Okay, so this call, if I bought it today, if I bought this Friday and Monday the Dow opens and falls 1%, the value of this call, actually, if I did it for this current week, the value would completely get cut in half easy. So I would lose half my money at the open. That's not me. Okay, I prefer to be somewhat hedged, especially if I don't have a specific trigger for that day. So if I did this, then I bought something and I sold something. So on a bad day, this loses and this gains. So my absolute loss is lower. The speed of which I'm losing is slower. So yes, it is limited in upside potential, but I just showed you limited means taking $1, turning it into $3. What's wrong with that? Who complains about a double and a triple? Nobody.
Right.
And limiting the speed, the anxiety, it's a slower moving trade, self-hedged, This is still a fast trade because I just showed you it's only 1 week. It only has 5 days on it. So one bad day is like, 1 out of 5. That's not a good thing. So that's why if I'm doing a spread like this, I wouldn't do next week, folks. I would go out. It's going to cost about the same. Pretty close to it because they are close to current price. And why wouldn't I buy myself extra time for about the same 10 cents difference or 14 cents difference? That would be, I wouldn't choose that one in July 30th. I would go out 2-3 weeks. Why wouldn't I? It's going to cost about the same. If I did the single leg, it's not costing out the same. Look, it's 330 here. And if I go closer in time, it's going to drop drastically because it's one leg. But if I do a spread, it's going to be about the same.
Thank you. And so the golden nugget here is if you're doing a spread, why not go out a little bit further? Because it'll cost a very similar amount. And I do want to put this just to let everybody know, there's only 17 laptops left. We had 30 to start out with from what Neil told us, and we got 17 left. And so the code is in the chat here for the 50% off of the options chat room. So go ahead, keep going, Nick. Just want to let people know there's 17 laptops left.
Okay, so you've heard of the law of diminishing returns. So too much of a good thing might end up being a bad thing. So going out too far slows the trade down too much. So if it's an earnings trade and the earnings are next week, I don't go out 6 months. I go out a couple of weeks, 3 weeks, because I want the burst so I can exit out of the trade if it was indeed just a trade. Yeah, you go out too far, then you slow the trade down. You don't have the chance to, quote, scalp a win, meaning book early, book fast. And so it is important to pick the right balance. And which one, there's not one perfect, but there's some stuff that works for one person, but not the other. So you're going to be playing around, making small mistakes, and hopefully just learning from them. And if you don't develop the system, like I get a lot of questions. Hey, Nick, help me out with this trade. What do you think? I got in trouble. How would you handle this? And I would ask immediately, why did you get into the trade? Not to be pokey about it, but I really want to know why, to see if that why is still there. You'd be surprised how very few people actually have a reason why they got to trade. Oh, I thought it was going to go up. Well, obviously, but what made you think it was going to go up? So a thesis. So I usually say no trigger, no trade, or no thesis, no trade. So if I don't have a technical trigger on the chart, or I don't have a legitimate thesis thought or an idea or a theory why there is a specific reason the stock is going to outperform or do well in the next period of time or short it, then I shouldn't take the trade. I'm just guessing, I'm hoping. If I'm following somebody's thesis, that's fine. Just make sure to note it and see if you can track it if it's still there. Like if somebody says, if you read an article about a company going to, like if you read that, hey, Peloton's going to get out of its legal trouble soon, the headline's going to break out around the 3rd week of August or whatever, that's a legitimate thesis. I don't know if it's true or not, but I wouldn't fault you for like, oh, don't fall for it, don't take it, because I don't know any better. And you should take listen to yourself. And then keep testing the thesis. Remember the percentage, the odds of success, and you test it and say, how realistic is that still? How realistic is that still? Am I still needing to be in this? Do I need to adjust it? Do I need to add time, like take it out and open it out in time? So testing the reason why you got into the trade is step one, not asking for help. But asking for help and then not knowing you have it, then your next job is to start a list next to your computer and say, things to do before opening a trade. Step one, have a thesis, have a reason, have a trigger.
And correct me if I'm wrong, but you went over 60 tickers this morning for your group, right?
65, 62, but I had 3 or 4 I didn't write down, so I'm going to round to 65.
All right. So just for everybody who wasn't here earlier, I might even share my Benzinga Pro screen, Nick, if that's okay, just really quick.
Yeah, in fact, the video link is in the chat, so you can scroll up in the chat. It's probably in there somewhere.
Okay, cool. So I'm going to go ahead and share my screen here because I'm sure some people here are probably wondering, all right, so if I join Nick, where am I going to actually find this information. And so there's all these other tools inside of Benzinga Pro, and it looks like someone. Okay, thanks, Neil. Neil's sharing it right now. But take a look. So there's this chat where you could ask Nick anytime about any ticker. There's also some other very, very committed traders in there with lots of experience asking quality, educated questions. And look, he's giving you the tickers right there in the chat with the video links. So every week, Nick, right? You do a prep for the week. You evaluate the overall market as well as evaluating specific companies. So if you don't have that thesis, this is where you can build your repertoire, your arsenal of what to go after in the market.
So one more thing, actually, it's correct but incomplete. So every morning in the chat room, I post my plan for the day. God, I almost hit Alt R. Hold on. So I usually say, okay, so what is my plan for the day? And I share the main ETFs and main the tickers that everybody cares about. So I share the ES, which is the S&P E-minis, basically the SPX. I share this one with all the drawings for the day. So, for example, this was Friday. I had the breakout line here, and I said the opportunities up there. And then I said the open air trigger here. That was an older trigger, and this is the upside opportunity, and they're at it right now. So we're ready. And if price falls, we're ready with the supports and the pivot zones that are important. Okay. So, and I do this for this ticker, and I do it for the NASDAQ, which is like this, and it's in open air. Hard to keep up with these guys. And then I do the SPY, and then I do the IWM and the QQQ. Similar situation where every day I have a plan for the day. And this way, and that gets shared in the chat room. So this is the IWM, so they know where the resistance point is. And look, every week, every day they're failing in the resistance, and they're establishing lower lows. So that's where the trend needs to turn. Must hold, support zone, secondary support zone, pivot zone. So we have everything we need to trade a smart day. And that happens every day in the chat room in the morning. And every weekend on Sunday, some weekends are different, like if it's vacation or holidays. But Sunday mornings, 7 a.m. my time in California, 10 Eastern, we get together for about an hour. Today was 2 hours. And we discuss tickers and some lessons here and there. So I take tickers and we do them. I record it and share it for somebody who can't attend. So yeah, listen, it's not easy to be in this chat room with me. It's not cheap, and I appreciate it. And I try to plop as much value back into it and knowledge. So I have a clear conscience about the effort that you guys put into it and my effort into it. So I hope people, listeners and watchers here, see it too.
All right, so hold on, Jonathan. So we got the platform open right now. Do you guys have any questions about Benzinga Pro or about the subscription with Nick? We can get right back to the education if no one has any questions. But since I have Pro open, we can do a little run through on the tools and stuff like that. And I'm sure Nick would be happy to talk about the charting and that sort of thing.
I'm not seeing
and Luke is here. Hi, Luke.
Hey, Luke. Ever-present Luke.
Ubiquitous.
That's a frightening thought. All right, so it looks like we're not getting many questions. Any questions about options, guys? Remember, participation is rewarded during these sessions. Hit us with how much is Pro monthly? Pro monthly, so let me go. Let's do this. Whoops. That's my
$1 million.
Almost. Maybe one day we'll have a $1 million subscription just for Jeff Bezos.
At this rate with inflation, sure, probably next week.
So when you go to pro.benzinga.com, you can see the pricing. This is what we're offering today. Is the options mentorship. The monthly price is $347, and we're offering it for I think a little bit under $1,800 with the laptop. And all of that. So it's just, I mean, it's a screaming deal. Honestly, if you're new to trading or if you're just very serious about trading and want to do it more often, what you're getting during this webinar, and I'll make sure that link is in chat. I think it should be. Jonathan, can you check me on that so that you guys can get to it? Yeah, that's just an incredible opportunity to get in on that while you're here. So that should answer that. Can you watch on mobile phone for those that work? Absolutely, my friend Twisted. Very good question. Mobile phone works. You can use Benzinga Pro on your phone. You can use all the regular just Pro Tools on your phone. But then also when you're using chat with Nick for the mentorship portion, 100%. You bet. Like we very much had people working full time in mind when we put this together. So if you are working full time, doesn't matter what you do. If you're working outside or if you work inside in an office or something like that, you're going to have the ability to pull out your phone. And even if it's for 10 minutes a day checking in, you're going to have the ability to make informed trades. So it's just a killer value. So a laptop, some Cold War. Yeah, laptops. So to the first handful of people that grab this deal today during this session, and probably until midnight, I'm pretty sure, you are going to get a trading ready laptop, brand spanking new out of the box. So we usually get those are around about $450 in value. It's a Microsoft operating system laptop, so that you can run everything that you need either at home or on the go. And again, this is designed with new people and people that have been trading for a while in mind. We really just want to build a great community of people at a killer price. And it looks like we have a question about a covered call. Nick, did you cover covered calls yet?
I did not. That would be a good topic.
All right, let's switch back to your stream then.
Okay. So let me switch here. Okay, so let me see here. A covered call. So I told you earlier, nobody should sell a naked call. What is a naked call? It's basically shorting a stock when I sell a call and I don't own shares in it. So covered calls is a symbiotic relationship between a buyer and a seller. I'll use an example. We can't use the DIA for this one, not very applicable. So let's go with Facebook, because it's a realistic number. If I use Tesla, you'll go, what? But not a lot of people have 100 shares of Tesla. So we'll go Facebook and we'll go to September or even October. All right, so let's say I'm lucky enough to be long Facebook stock. I have more than 100 shares, and I would like to put my shares to work. And I will take a little risk, but it's a risk that has no losing end to it. So this is a trade that the worst case scenario is more profits. So very few of those trades left in the world. How does that work? So let me change this price to be 400 to look up a little higher. Okay. All right. So I'm showing as much that they allow me here. So this is the call side. And the covered call simply means that I own shares and I want to put them to work. And to do that, I can sell calls against the shares I own. So how does that work? So if you remember, I said the definition of a call is to, when I buy a call, somebody buys a call, they reserve the right to buy shares at that price. So let's say somebody wants to buy $450. Somebody wants to lock their price at $450 for Facebook. Why? Don't ask why. People do. So there are buyers of this call for that purpose, or for another purpose. They want to just be bullish the stock without spending the money. It's the same thing. So $200 gets them long Facebook. Well, guess what? $200 could be income for you if you don't mind selling your stock at $450. That's $90 higher than where it is right now. So if I do that, I go ahead and trade and I sell one call. That means I've committed, I collect money today. No money leaves my account. The trade opens and I open risk. My risk is I am committed to offering this gentleman or lady my shares at that price at any point in time. So there's a myth that price needs to be above that. It does not need to be above that, but it should. Otherwise, they're kind of like, why are they trading? That's the wrong thing to do. But they can exercise their right at any point in time. So they might decide that, hey, today I want Nick's calls, Nick's shares. So I may wake up one day not owning shares, but I get to keep my $240 and I get to participate from here to 450. So regardless of where the actual trading price was of the stock, if I lose my shares because of this call, I'm going to be paid $450 for them. So the worst case scenario is for me to ride the shares from here to 450 and then sell them. And guess what? I keep 240 for 230 with it. So my break-even price is 452.50. 30. And then after that, I can say, oh man, I'm missing on profits above that. Big deal. I can turn around and buy them, right? I can buy calls along the way. There's tons of things we can do. So that is called a covered call. I own shares. I sell a call against my shares, meaning I promise somebody my shares at a certain price for their premium. They pay me for that reservation. What happens if price doesn't reach there, or if they don't step up to the plate and say, give me your shares? I keep the money, the call expires worthless and dies. So be careful to do that around earnings, because stocks can really skyrocket on earnings, but it's also potential protection. So let me take this a little further. So if buying puts is protection, couldn't I just sell a call to buy a put and protect myself for free? Absolutely. That's another strategy people do.
What's that called?
I don't know if it has a name. It's called free protection. So there's another one kind of like this that has a name, which is stock replacement. So if I'm nervous about my shares at 360 from Facebook, what I can do is stock replacement, which means I sell my shares and then I sell a put below it. So I sell my shares, lock in my price, I sell a put below it, collect money to still be long shares, because then I collect money, and if it drops, I bought shares lower, so I protected myself from the drop. And you can take it a step forward and take that $700 and buy a $700 call. So now you stay long for free, but you have protection. So let's recap. I'm long at 360. I'm worried. I want to lock my profits. I get rid of my shares. I sell this put. I buy this call. And now I'm still long for free, but no risk immediately. Shares drop to 330. I buy them back at 330. Did I lose anything? Nope, not a penny. And I avoided the loss from here to 330. And then I'm back long down here.
I want to do this. I'm going to do this week if I can. That's awesome.
But you have to own shares, right? That's called stock replacement.
I've got lots of shares.
I'm about to go buy some shares so I can do this.
Mr. Moneybags.
not Facebook. Not Facebook. I don't
know.
Okay. Neil over here.
That's ballsy.
I'm not trying to flex.
Neil over here with 1,000 shares of Amazon.
Oh, geez.
Maybe one day. All right, guys, remember, are you guys getting tired of me saying this? Your participation is rewarded. Guys, keep those questions coming. It is good for everyone. What is it? So this is, let me know if I got your name right. I believe Vincente. It could be Vincente. I'm not good with names nor with reading in general. I'm just a man. Why did we switch on this? Jonathan, a little click happy. Did we cover what is a bearish sweep call?
A bearish sweep? What is a bearish sweep?
Okay, then you know what he's asking. Then you're probably asking about, my friend, about a bearish sweep on the options tape. So that's an unusual. That's unusual options activity. A sweep is when a large money manager or institution or just big entity very aggressively is either buying or selling options, and is doing so across. They're buying such a volume that they're doing it across different brokerages to make it happen. That's a sweep, and that shows up on the options tape, and that's something you get in Benzinga Pro, and that's an indication, if it's a bearish one, that someone knows something. That's inside knowledge. Yes, it's illegal. Yes, it happens in real life. Yes, we use it to make money in the markets. Yes, it's available in Benzinga Pro. So that's what that is. A bearish sweep means a whole bunch of something was happening on the unusual options activity feed that you can get in Benzinga Pro, and it's an indication that, I mean, an example of this would be like, I don't know, I don't know, like it was Nancy Pelosi's husband with bought like $1.3 million worth of like just straight up calls on Google and like Amazon, ahead of, I think, them getting let off the hook for like a hearing or something like that, and it was a move that would have tipped you off that legislators or lawmakers knew something was going to happen. That's an example, and guys, I might have messed up what exactly happened there, but that's just an example of how that works, guys. All right, get in Benzinga Pro, try it out.
Yeah.
You know,
It's good. It's good. It's easy to set up too, and you just click, and the table's right there. So I like.
Yep, it is. It is made to be easy. It is for the active retail trader.
My favorite is still the kitchen sink setup on Benzinga Pro. You just one button, you get everything.
Yeah, if you want to see every tool that's in Benzinga Pro, there's a button that literally says "Get the kitchen sink." You get the whole damn thing. All right, guys. Any questions that have to do with options? I will reward your participation if you have a good, thoughtful question. I'm going to try a covered call. Michael says, I'm going to try a covered call tomorrow. I own 100 shares of KOS.
Okay, so I want to put a caveat out there. This is feedback because human emotions, we have the FOMO and all of that. It's all true, okay? This is what keeps us alive in the wild. So the FOMO is real, and it serves us well in the wild. For example, if we're still living in the bush and you see 100 people running out of a forest, your instinct is to turn around and run with them. That's the wrong thing in options, because that's what drives us to buy too late and sell too late. So with the covered call, I want you to ask yourself from a third person perspective, are you really sure you're okay selling your shares at that price? Because I can't tell you how many people come to me, Nick, I'm in trouble. I sold a covered call and now I'm losing money. It's like, no, you're not. You're just going to have to live up with the promise you did, which was to sell the shares at that level. Really, just picture the worst case scenario where the stock spikes to high heaven. Are you really going to be able to live up to your expectations and deliver those shares and miss out on? You're not going to lose money. You're just going to miss out on upside. And you need to be honest with yourself that you're okay with that.
Yep. I think one thing that I've heard is when you think you've got a good idea and it's the best idea, stop and try to think of a better one.
That's good.
All right, guys, more questions for Nick on options spreads, concepts around it, how you can use it as insurance, how you can use it to make money, what the week ahead might hold for us, anything about indexes, any particular tickers you want to see. We've got the man on the line for not much longer.
Let's do tickers.
Okay, then how about XBIO, which is one I'm not familiar with.
What the heck is that? Oh, okay. I think, God. So sorry, it's just a habit. Alt R. Okay, so it's had a round trip. So if you refrained from buying up here, good job. If you thought you missed it, then this is your opportunity. This is where machines start to buy it back up. I don't know anything about it. It looks like a biotech company. So do your homework to make sure that whatever the exuberance here is not functionally gone. If that's the case, then revisit. I'm looking at the fundamentals, and quoting the trading view, there aren't many. So be careful with that. So do your due diligence on that. It looks like, let's go to a daily. This is a choppy chart here. Yeah, whoa. Okay, what the? Wow. So you know what? This look here on the left-hand side. This bunch of volume out here tells me that there must have been history with this stock. So let's widen the time frame. Check this out. So yeah, not my stock, not my typical in the not what I trade. But you see how we got this clue from looking up here. So this here is a tool. By the way, if you want to improve your charting skills, start reading about volume profiles. Super, super useful tool. I don't have anything else on the screen, really. Eyeballs to find the levels, and then I get the confirmation from the volume profile. And this volume profile told me that this chart is not telling us the whole story, even though it's almost a year. So I zoomed out into the weekly to find out that, whoa, there's a lot to be said. Now, this is in fact support. So you can assume it will hold until it doesn't. So if you want to take a long as price falls into it, I don't blame you, but make sure to stop out below these. That would be my course of action.
All right, guys. Do we cover poor man covered calls yet?
Okay, we can do that actually, because it's related to the covered call we just spoke about, even better than tickers. So the poor man covered call is basically a covered call. But what people don't realize that, let's say I bought a call out in time in Facebook. Let's say this one, 390 or 380, a while back, and now it rallied. So what I can do is I can sell calls against it shorter term. So it would look like this. So I own this one, and I can sell August against it. Let me reduce these to be 6. I can sell another one in August. We said 380. Where is it? Oh. So we go to 385 to show it. There we go. So if I own this one out in time, I can sell a call against it shorter term. Now, this is a poor man's covered call. However, I would go up higher because if I really want to hang on to this, I'm just trying to get some money while I wait. I don't want to get rid of it, so I want to create a diagonal versus a calendar. By the way, this is also called a calendar spread. I buy one and then I sell one shorter term at the same level. But if I bring it higher, the one I sell shorter term, it turns into a diagonal. So from a visualization perspective, the vertical spread would be just up and down in one time frame. The calendar spread would be this one, because it's in one time frame here, October, and then the second one is in August. So, but they're same level, 380 and 380. If I move this one down or up, hopefully always up, not down, because I create risk if I could move it down. So now we have a diagonal because we not only moved time from October to August, but we also changed level from 380 to 395 or 400 or whatever. So that's the poor man covered call. When you own a call out in time, and you sell one closer to current price. I believe that's what they refer to it on CNBC.
Okay, so do you want to look at BABA?
Sure. So Heartbreaker, right? The company is fantastic. No company can match its earnings power, revenue power in one day. 75 billion in one day on what?
Yeah.
Yes. And crazy numbers. Whoops. So this is a monthly chart just to declutterify declutter the picture and to make it simple. So you can see that this was a significant level and then they popped up and then they recovered, they fell back and tested the level for footing to a degree, and then they broke out and now they're testing this level before they hopefully break out. The only problem I see, so there is support here. So there's political problems, which I know nothing about in China. So we don't know what the end game there is from that perspective, but gosh, dang it. I mean, you can't deny the earnings, the P&L that this company has and the balance sheet. So from that perspective, it's a toss up. From a technical perspective, I'm confident being long it and taking longs. Then the other problem that comes in from the all-time high markets. So if the markets have one more burst in them, okay. So I would like to be long BABA by selling puts or put spreads and waiting for time to tick, or even buying calls or call spreads to try to swing it back up with tight stops. So I do like the company. I hate the way it's trading. And I hate that they got punished on Friday again for another headline of some new rules and regulations. But this is an undeniable value here. So if I look at it from a perspective, look at this earnings power, just amazing. So revenue is the blue, profit margins dipped in COVID year, that's fine. But the company cash flow from operations is 34 billion. So clearly a healthy company. Statistically, it's as cheap as Amazon almost from a price to sales, and it has a low PE as well. So income statement, 37 billion to 100 billion and change. Undeniable company, under fire from political rhetoric right now. So if I'm long, I'm not bailing out of it. If I'm looking to get long, I could take some longs with tight stops.
So speaking of that, when a stock is going down, so let's say it's going down past a potential stop, but you're kind of averaging down into it because it's a long-term hold. And this is a question from chat. So if you're averaging down in a long-term hold, which already I'm sure you probably have some opinions about that, but just for rhetorical reasons, if you're averaging down on your stocks, buying puts would make sense, right?
Selling puts. So I don't average down in a stock that is not a sure thing. let me clarify. Hyliion is not a stock I would average down in. CCIV I would not average down in. Why? They have no P&L. So they're still a binary event. They have nothing on the market, basically. So I'm gambling. With speculative stocks like that, it's not a diss against the stock. It's my definition of what I average down in. The company's still doing well, but they have no actual financial metrics to show for. So I would average down in Apple, Facebook, NEO, XPEV, even LI, because they actually have a P&L. And if I know the company, I can decide, okay, value. So the second rule of averaging down, I don't average down unless the differential in price is huge. So if I bought it at X and then it drops down 20, 30%, then I add. Or time. If I bought some today and 3 days later it fell 8%, I don't add. That's too close in time, too close in price. So to add stock, I can sell a put instead. So if I own 200 shares of BABA or 100 shares of BABA, and I want to add some, why wouldn't I sell a put down at 175 to add another 100? So this way I collect some money, but I'm not at risk right away. I build myself a 13% buffer from current price or so. So buying a put doesn't help the average down price. I don't understand how buying a put would help. I would sell a put to lower my cost basis, if I'm correct. Otherwise, I would have bought the shares 13% lower. Does that make sense? So, okay, if I own 200 shares and I want to buy shares, then I'm risking them right here and the stock falls another 10%, then I'm down another 10%. But if I own shares here and I sell the put down here, if the stock falls 10%, I still average down because the money I collected for selling this put dies in my favor. So it's cash in my account. So it goes against my cost basis of the shares. So I would sell a put to average down. There's another trick that's too complicated to cover here, but I will mention it. Should I? I don't know. So it's you basically create a call butterfly with the 100 shares you already own. So if I own 100 shares of BABA and I want to double down, never mind. Okay, if I want to double down, I would buy calls and sell calls against them to make a call butterfly with the 100 shares. So I buy a call, I sell two, and then I own one. So now I have a call butterfly that didn't cost me much. And if the stock bounces to halfway, I'm even. I can close the whole thing for even. So
maybe we can make some slides on that and drop that in the chat for the community.
You don't need to drop it in the chat now because it could be dangerous for somebody that doesn't know what they're doing.
Right. I meant like for
later. Yeah.
You cover that type of stuff in the inner circle chat.
Yeah, that would need a whole lesson all by itself because it is doable and it's very functional for somebody that just wants to get the bug out of something and they just want to pop. And if it has a realistic pop, you can almost double down for nothing.
Cool. And Nick, you have given us so much of your time. People were asking about your top indicators earlier, and we might not have time to cover all of this last question. But Cisco here was asking about the 12 indicators in your upper left corner that you're using. Maybe just covering a few of your favorites.
I'm not using them. They're there, but I'm not using them. I can tell you what I use. I use the volume profile as an indicator. I use all these lines are hand drawn from my eyeballs, which is my top indicator. And I almost did it, Alt-R. So let's double here. So this blue-red is called a regression line, and it's available, I believe, for free on TradingView. It's just a visual representation. It's not an actionable thing. It just shows me where the mean is. So reverting to the mean keeps me sane as to where the transition is going. I don't act on it. This is a secondary. So if I make a decision, I look at this to see if it agrees with me. You've heard the term price is truth. This is what this is. It's called the volume profile. In TradingView, it's called the VPVR, I believe, variable range volume profile. There's another one I use for shorter term. Like if I go to a 30-minute chart, you'll probably see it. Almost did it again, Alt-R. All right, you can see faint ones here. Same of these, only for the one session. Very handy. You can see them right there. So once you know what that is, this is gold information. And this is also from TradingView. This is called VPSV, I believe, HD or something like that. So it's volume profile. It used to be a beta, but I don't know if it's available now, but it should be. So it's golden. Other than that, I really don't use much. If you want to put in moving averages, great. If somebody that knows how to use VWAPs, that's also good. But you just have to be simple. Whatever you use, specialize in it. Like I know people that use harmonics, but they're good and they specialize in it. Otherwise, they're going to get hurt. The less information, the better. The simpler the system is best. Nothing beats levels, folks. Nothing. Because price is truth and level is absolutely truth, and that's what the machines look for.
Awesome. Yeah. So you heard it from Nick himself. We have benefited so much from you today, Nick. So thank you. Any last words on this upcoming week before I'm going to get a little bit more into Benzinga Pro, talk a little bit more about your chat room and all the features and all that good stuff. But any last little tidbits before we let you go?
Sure. Whatever you think your conviction is, knock it down a notch. Because we don't know what the f is going on. Not even the leaders know. This is literally uncharted territory in all aspects. We've never had this set of circumstances before. So whatever I think I know, I should know that I'm missing a piece of the puzzle. So be humble. Never all in, small bites, book profits. We are at extremely, extremely high levels. Extremely high levels. So we are very at risk. So I'm going to show you one chart. The other day, people were freaking out. Do I buy this dip? And I said, point to the dip for me. This is the S&P. Where's the dip? Where was the dip the other day?
Right.
This is a weekly chart. I can't center it. Gosh dang it. Okay, so where's the dip in the S&P? That was the painful week that we saw. My God, when will this correction end? So be humble.
All right, that's some wisdom from the one and only Nick Shaheen. I hope all of you enjoyed that today. We'll have to have so many clips from today's session. So thank you, Nick. We'll see you bright and early tomorrow morning. And yeah, just thank you so much.
Absolutely. For me, it'll be dark and early because it's dark o'clock on California when I get up. So
yeah. Oh, dark 30. Or Oh Dark 100. So yeah, thank you. And
can you kick me out so I don't have to switch screens here?
Get out of here. Go.
Boot me.
All right, I might have cut him off there, but all right. So we can go over some more of what exactly is in Nick's chat room, how much is it, all that good stuff. Some people were asking earlier, how much is Nick's chat room? And so, and by the way, what we're talking about is inside of Benzinga Pro here, you've got this chat open on the left side of the screen, and there's a bunch of different chats that you can choose from. Because we have thousands of traders in here, active, professional, or part-time traders. But there's only one of these where you get access to Nick Shaheen. And so as you can see here, he's saying happy Sunday. Here's my prep video for the week. Also, it has reviews for 65 tickers. So you could sign up right now, 50% off, and get his analysis of 65 tickers for this upcoming week. And so I'm just dropping that link one more time in the chat here. Plus, in addition to that 50% off, by the way, that's $1,683 for the year instead of normally it's like $3,500 or so. You get a free laptop with it as well. So we just want to make sure if you are still learning your trading strategy, if you don't know what an iron condor, if you're still learning about covered calls, come into the chat room, learn step by step. You don't even have to do all of it with real money yet. If you're not comfortable, make some paper trades with Nick's guiding hand to help you. We also have our whole team our support team and our news desk team available inside of this platform. So myself, Rodrigo, Neil, it's one big happy family, and you could always shoot us a message, and we've got like 10 or 15 people to make sure you have the highest quality, world-class customer service available. So yeah, I'm scrolling down here. You can see a bunch of different messages here in the chat. And so normally that'd be $347 a month. But with this deal, it's like less than half of that. It's like 70% off of the monthly price. So yeah, thanks, Nick, for the shout out. Go ahead, get that package. I think we have, I'm just checking the
and that's Nick Porter, not Nick Shaheen.
right.
Nick Porter, thank you. And guys, this is Neil still here. I do have a hard stop, so I'm going to leave you in the strong, trustworthy embrace of Jonathan Mallard, who's going to walk you through how everything works. If you have questions, now is the time. Drop them in here. And I'm not even going to say it. I'm not even going to say, yeah, I'm going to say it. Participation will be rewarded. So make sure you get those questions out. And I just want to thank a few people that just joined the family. Jer, Ken, T Chic, and I'm going off emails. We got an info so I'm not gonna dox your company for joining. And Holiday. Thank you guys so much for joining. Welcome to the family. Trading together is a life-changing experience, and you guys are going to know that for a darn fact on Monday. So thank you very much. We will see you in the markets on Monday. And guys, the deal's scrolling across the bottom. Jonathan here is going to explain how Pro works, answer all your questions about anything that you need. You are crazy if you don't take this 14-day money-back guarantee opportunity to trade with Nick, with a group, and get full access to the best damn due diligence tool on the planet, Benzinga Pro.
Thank you, Neil. It's always great being here with you, with Nick, and I'm just here. If anybody needs any help, obviously I'm here on the stream, but I'm throwing my direct email and phone number right up there on the screen. So email me at jonathanmallard@benzinga.com or call me at 313-284-2483. And this comes with a 14-day money back guarantee as well. So you can lock in this price before midnight tonight, and then we would ship that laptop as soon as the money back guarantee period is over. So then you get it in like another 7 to 14 days. If you want to immediately, just let us know, hey, I don't need the money back guarantee. I'm all in, and we'll ship it to you right away. So let's see here. Nick, awesome. You love the chat room. Fantastic. There's so much value in there on a daily basis. So let's see here. Go ahead and ask some more questions. But in the meantime, I want to jump over to what someone was asking about earlier here, which was those bearish call sweeps. So for those of you who aren't familiar with unusual options, this is in addition to Nick's chat room. So in addition to Nick's chat room, you also have all of these other tools available. So for example, I'm going in here to our calendar tool, and I might need to zoom this in a little bit. Maybe I'll just get rid of my face. You don't need to see my face. You just need to see the data. All right, there we go. Now we're talking. So inside of this calendar tool, you have unusual options, and this is one of 14 different calendars on here. We'll see if we have time to get to some of this other stuff. But basically, you're looking for huge institutional size orders that could indicate sentiment in the market or, possibly insider knowledge on a particular stock. So, in fact, let's do this real time here. Let's switch over to the earnings calendar because we're all talking about earnings this upcoming week. And then let's create a little watch list. So I'm selecting the dates for next week. So the 26th through the 30th. This might be too many for me to select at once. I mean, I could if I had time. But there, we've got all of these companies announcing earnings for the upcoming week. And I'm just going to go ahead and select a whole bunch of these. So I just click and drag, similar to how I would use a spreadsheet tool. I'm not going to do all of these because there's so many, but you could if you wanted to. And I'm just going to do Command-C on a Mac, Control-C on a PC. And I'm opening up the watch list tool. So I open up that watch list, and I'm going to create a new watch list, and I'll say earnings this week. Create watch list. And then I'm going to paste that list of companies that's going to have earnings this week. So I didn't do that many in the interest of time, but there, I didn't have to type them all in. They're all right there in that watch list. And I don't even have to keep that open. So bye-bye watch list. I'll see you later. Now I'm going to go back to my unusual options, because who here thinks, throw me a 1 in the chat if you think that there's someone out there that might know something about what's going to happen with these companies announcing earnings, that they might know more than you or me. Give me a 1 in the chat if you think that there's someone out there that knows more than you or I about, how the earnings are going to go in this upcoming week. And so now I'm going to go over to the unusual options activity, and I'm going to filter it by that watch list. So I'm going to say earnings. Oh, that was earnings tomorrow. I'll say earnings this week. Yeah, there we go. Earnings this week. Done. Okay. So now I'm only looking at options from Friday that were on companies announcing earnings in the upcoming week. So this is interesting. And I can go over here to columns and add a sentiment column. And then I always like the sentiment, because this can tell me, all right, basically, are the buyers or sellers in control of these options? And if you don't know what all this means, just bear with me here. There's a lot more to this. But this is just good to keep in mind, because immediately you can see, okay, these are all bearish. So these are people selling calls. Maybe they're selling covered calls. Maybe they're not. We don't really know. But I'm seeing a lot of bearish calls here. And what I want to pay attention to here, what I always like to pay attention to, is the expiration date and the strike price. Because what I want to see is, look at this. For AON, I have 4 calls here on Friday, and I'm going to add the time frame, the timestamp here. Look, these are all within what? 2 hours, 2.5 hours of each other. And then I can see the total trade price. Every single one of these is over 130 grand. So we're looking at what, $500,000 around there for just this one company. So this is an example, without getting too much deeper into it, where on this table, you can find duplicate trades from hedge funds or other institutions where they're doubling or tripling or quadrupling down on these directional bets. There's a lot more that you can do on here with volume over open interest, sweeps, all that good stuff. And we even have step-by-step strategies available on our help site. So you could just type in unusual options, and we'll break it all down for you. So right here, unusual options activity strategy. There are people who use this every single day, where we're teaching you how to fish and not just giving you the fish. I mean, let's be honest, Nick is practically giving you the fish, but it's a both and. We want you to earn and learn so that you can make the most out of your trading experience. So definitely check that out, the unusual options activity strategy, utilizing that unusual options activity calendar on Benzinga Pro. Yeah, good question, Dave. What is a sweep versus a trade? And so if I zoom in here a little bit, we're talking about this this trade type column here. And a normal trade is simple enough. It's just where you buy or sell a certain number of option contracts, when we're talking about contracts, and all happens in one shot, one brokerage, one route, etc. Now, a sweep could probably be best described if I add something called the trade count. So I'm adding another column to my, and I'm just going to remove the chat here temporarily. I've got this trade count column here, and I'm going to zoom in on that. And you can see that across from trade, it says 1. And across from sweep, it says 36 or 15 or 21. And so this means that this was a really big trade, and they couldn't execute it all in the same place because there wasn't enough supply or demand to execute the order. And so, so basically, that can indicate that it took more time, more effort. It can oftentimes indicate that it was a more significant trade. So lots of times I could go in here and I could even filter by trade count. I could say only show me orders with a trade count greater than 25. And you can see that really significantly reduced the number of results there. And I'd be looking at VFC here for sure. So that great question there. I'm trying to do everything at once here. So thank you, whoever asked the question about the sweep. Oh, that's Dave. Thanks, Dave. Keep the questions coming. Whoa, Vicente says Bitcoin going crazy right now. Let's take a quick look here. We should have Bitcoin on Benzinga Pro now. So I'm just opening up the details tool, taking a look at BTC to the USD. There we go. Let's see if it likes me today. Oh man, yeah, it definitely does look like it's going crazy. That's very interesting. I'm not gonna lie. I don't know how many crypto people we have in here, but I actually, don't kill me, but I sold like pretty much all of my Ethereum like a few days ago. So we'll see how that turns out. I sold it because I wanted to use more of my capital for Nick's option trades. I'm actually trying out some of those butterflies that I've been learning from him. All right, so any more questions? I'm just looking up here. Keep in mind, I'm throwing this back on here. Use that code for 50% off. That's good through midnight. And I'm just checking here. How many laptops do we have left? It's not going to let me bring that up. But last time I checked, we were down to about 10 laptops left. So get in ASAP so that you don't miss out on those laptops. And again, that's going to be at least 8 gigabytes of memory. So that should have everything you need to run Benzinga Pro, your other trading programs, etc. I tried to paste the sale code in the YouTube chat, and it pasted all of the earnings tickers for this upcoming week. So I guess you'll have to wait for another, but it's right there on the banner and the screen as well. Okay, so you've got the chat. Obviously, Nick is the options king. I don't know how many of you are familiar with some of these other tools that are available within the chat or within Benzinga Pro. But Benzinga Pro is really well known for the news that we provide as well. So, Nick really sticks with technicals. He's looking at those technical levels, and you can do all of that inside of the details tool. But you can also use our newsfeed. So rather than clicking on 10 different websites, to try to figure out what's going on with the stock or the entire market, you could just open up the newsfeed tool. And let's say you just want the news on the overall market, you could just filter for the SPY. So here in one place, you're going to get a lot of that economic information. You're going to get, political updates, anything that could affect the entire market, maybe the Fed as well. Or here's what this is what excites me. We have this thing called categories. So these category tags are from our news desk or from our AI system. And if you click on that, the first thing I want to point out is the exclusives. So Zoltan piped in the chat a little bit earlier today saying, hey guys, we've got an exclusive interview later this week with this big company. I don't have time to scroll up in the chat right now to find it. But when Benzinga has exclusive news, Benzinga Pro is the fastest way you can get that news. No one else is going to see it before all of you in Benzinga Pro. Anyone who has that options mentorship chat is going to be right there. And so you want exclusives and market moving exclusives. hot is just going to be the biggest stories of the day, regardless of the source. So that's good to pay attention to. And then let's see here, under news, I have rumors highlighted in hot pink because I want to make sure that I have those rumors no matter what. So many times I see a rumor on our news feed where our news desk has spotted something on Twitter, like say we're hearing that XYZ company or a certain analyst firm is giving an upgrade with a strong price target on XYZ company. And then sure enough, I remember one time, it happened like 6 times in 1 week, where I woke up the next morning and that stock was up, 10, 15%, because sure enough, that analyst rating had indeed come out. So you want to pay attention to those. There's a bunch of other stuff on here. Like you can see, I've got FDA, contracts, asset sales. But long story short, the main point is I can scan the entire market for these types of news items, click done, and boom, it's all there in one spot. So I know immediately as soon as that comes out. I see a question here. Any way to catch the 50% off? That money is inside my brokerage account. I mean, all I gotta say, don't take this the wrong way, but credit cards, if you have the credit available, that's what I would recommend. Of course, if you can't do that, I understand, but that credit card is probably the best way. We do PayPal. We're kind of, PayPal requires a lot of manual stuff, but we will make PayPal work for you if that's the only other option. Great question from Cisco here. How do you see everything at once in the news feed? Can you set up a second with specific feeds? Absolutely. Let's do that right now. So here I have a filtered news feed, and there's lots of different ways you could filter this down. But let's say I want a second news feed that just has everything. Maybe I'm a professional trader. I can digest all that information very quickly. And I want those press releases, SEC filings, partner links, you name it. I would go up here to sources in the upper left corner of the platform. That's weird that you can't see my cursor on the stream there. So I'll just zoom in on that. But I'm zooming in on sources. And then for this one, I'm going to add in press releases and SEC filings. So that's what I would, and I might even add in partner links. Benzinga Wire is the default source, so that's going to be on there automatically. And then I'm adding in partner links from all over the internet, press releases. Many times that is the fastest way to get that information pumped directly into our system, very low latency, as well as SEC filings. And so I'm going to click done here. And now you can see the difference. On the left-hand side, I have a lower volume of headlines, only a couple from this weekend, versus on the right-hand side, I have all those press releases, SEC filings, things from other websites, so that, if I'm just scanning through there and I really have a handle on the entire market, I'll immediately know which tickers to follow. One quick thing on this advanced news feed, there's also a screener filter. So let's say you want everything, but only for certain types of stocks. You could go here and you could say, all right, let's say I only trade stocks from $2 to $20. I'm going to say 2 to 20. And then I'll click done. And by the way, you could do this with volume, share flow, etc. But for now, I'll just click done. And now it's really it's unfiltered content, but on a certain type of stock. So that's another way you can do that as well. Great question, Cisco. And then just to recap here, I'm just throwing that coupon. I can't believe I did that again. I'm going there to find the coupon on my other thing here so that nobody misses out on that. But again, that's 50% off of the annual. So the annual is already discounted. And that's 50% off of the discounted version. And so then I'm throwing that right there in the chat. I'm just checking to see who already joined us. I will see who our new members are here. If I look down a lot, it's because I have two screens going. All right, awesome. Welcome, David. Glad to have you here. Anthony, awesome. Ken, welcome. Man, and then Chris, glad to have you on board. Wei, fantastic. So welcome, everyone. Glad to have you on board. And it's just awesome to see more people taking advantage of education and tools in our community. All right, let's go, Rick. Rick says, I joined. Fantastic. Glad to have you on board, Rick. And if anyone has questions, I see someone's payment just failed. Again, feel free to shoot me an email or call me. My computer's slowing down on me, but it's Jonathan Mallard at benzinga.com or at 313. Let's see, I'm just waiting for it to process there. 313-284-2483. And yeah, you can take advantage of all of those tickers that Nick posted in the chat. By the way, just one more time here, where do we find all this stuff that that Nick posts in the chat? That's going to be in the chat module on Benzinga Pro, and it's in the bottom left corner of Benzinga Pro where it says chat, and then you would just click. Right now I clicked close chat. I'll click open chat. It's right there. You could also put this in a separate window. So let's say you have a separate monitor that you want to use. You can do that as well. And then you could just scroll up here, and right there's Nick's video for Sunday. And then he's answering questions in real time throughout the day. You can see people are on here all day, every day, talking about which stocks to trade. Okay, I'm just looking back at the chat here. Any more questions? I guess that's the news feed. I want to show the screener tool. So I'm sure many of you have other scanners or screeners that you use, but the screener tool is just good for building a general watch list of stocks that meet certain fundamental or technical criteria. And so what I mean by that are, let's say, let's take the like low float stocks, for example. That doesn't really fall into the optionable stocks that we're talking about tonight with Nick. But if I were looking for low float stocks, I could click on fundamental filters and then scroll down to float. You see float right here. And then click on that drop down and say under 10 million float. So for those of you who are brand new to trading, float means the number of shares that are available to trade. So it basically means that there's a lower supply of shares available. And if there is a shock to the system, say positive news and everybody wants that stock, or bad news and everybody wants to get rid of it, it means the price can very quickly shoot up or crash down. So that means there's more volatility. Some people like trading off of that, others don't. But now we've got a float under 10 million. And then under technical filters, I really like relative volume. So I want to see, are there more shares being traded today than usual? Now, this is going to be looking at Friday's data, since obviously today's Sunday. But I'm going to go over to relative volume and then click on over 1.5. So now I've got shares, I've got stocks from Friday that were trading at least 50% higher volume than usual, and they're low float stocks. So, and, you know, there's a lot of flexibility here. So I could add relative volume as a column on the table. There's XBio. Someone was talking about XBio earlier. It looks like it was up 35% on Friday. So there's a lot of flexibility here. You can build watch lists. You can find dividend stocks here with the fundamental filters, look at institutional ownership, you name it. And it's a great way just to find some good opportunities. All right. Any other questions here in the chat? I want to make sure. Let's see. How many likes are we at right now for this video? All right. We're at 119 likes. Let's see. I don't know. Show us some love. If you haven't done so already, show us some love by smashing that like button, and that would just help us out on this channel. All right, next up is an analyst rating strategy. And all of this stuff, I'm doing kind of an abbreviated version, but lots of these strategies have expanded videos available on our help site. And so what I'm going to use here is, again, our calendar tool, but this time I'm going to analyst ratings. And of course, there's no analyst ratings today on a Sunday, but I'm going to go back 3 weeks. So 1, 2, 3 weeks to the 4th of July through today. And here are all of the different analyst ratings from the past 3 weeks. And so if I want to see, let's say I want to see stocks that have positive ratings with a strong price target, meaning, I might not even know all these stocks, but I know that some professional analysts have given positive ratings for these stocks. Then I'm going to go here to rating and filters on the right-hand side and click action on security. Actually, I'm going to click on rating instead of action on security. I'm going to deselect all of these, and I'll just select the positive ones. So I'll click buy, market outperform, overweight, sector outperform. It's a lot of different ways to say the same thing, right? These are our positive ratings. Basically, it's saying that the company is very healthy compared to the current price of the stock, or sometimes compared to its sector peers as well. And so now I've got all these positive ratings, and I'm going to sort this whole table by symbol, and I'm going to get rid of some of these other columns. So right now, I don't really need the name. I don't need the time. I'll keep analyst firm on there, but I do want price target, because what I want to see here is there a significant difference between the price target given by these firms and the current price. And so if I go over here, I could look at any one of these and say, okay, if I scroll down, look at Ally, okay, that's just got a couple, and I'm not getting the price here right now. So I could click on Ally and open that up in the details tool and see about where it's at on the chart. But anyways, the main point here is if you see 3 or 4 or 5 ratings on the same stock and they're all positive for the next 3 weeks, maybe you want to take a deeper look, do some charting like Nick was, map out those support and resistance levels, and see any news catalysts that are available in the details tool. So again, it looks like we've got about 5 minutes left here on the stream. So bring any last minute questions here before we wrap it up, and I'd be happy to answer those. One more thing that is very, very popular to use on Benzinga Pro that we didn't really mention yet is the audio squawk. So that's going to give you the fastest possible news via audio through your computer speaker throughout the day. And you just hover your cursor over that and then click on the blue play button. So then Charlie, who does our squawk, will give you live audio updates throughout the day on your computer speakers. And many people get the whole platform. They didn't even have Nick's chat. Okay, that's what I want to emphasize here. Nick's chat alone is worth the subscription cost, but people have been subscribing to Benzinga Pro for like a decade just for some of these other tools that are available on the platform. So definitely check that out, log in, turn on that squawk icon, and people trade that to the upside or the downside. Okay, you got my phone number in there on the chat. Let's see if I've got the link there one more time in the chat. And I just want to thank you, everyone, for giving us some great questions tonight. Cisco, Educate, DW2CB, Vicente. Glad to have all of you on here. Dave, Nick, thank you again. Tune in next time for another session with Nick Shaheen. And of course, tune in all week on Benzinga's YouTube for some fantastic content. In fact, I want to pitch right now, tomorrow morning at the open, I think it's at 9:15 a.m. Eastern time, we're going to have live trading here on YouTube. And we had a live scalp from Ryan Faluna on Friday. We've got Zunaid. Also, he trades full time, and he'll be streaming with us. So tune in tomorrow, 9:15 a.m. after you prep for the day in Nick Shaheen's chat room, and we'll see you there. Thank you, everybody, and have a great night.